All right. Good evening, ladies and gentlemen. Wow. Thank you very much for being with us this evening. And especially, we have two, shall I say, categories of professionals here: engineers, and then accountants, auditors, tax consultants, etc. So we try to come together to have a kind of emergence to understand ourselves. I'm sure engineers have issues with taxes. The tax guys are also ready to collect their taxes. They say they don't care. You have to pay taxes. That's the rule. That's the law. And somehow engineers also feel a bit slighted in some way. So it means that generally they don't understand our system. We may not also understand the way they operate. So the civil division structural subgroup headed by Engineer Alote made some impacts with GRA to bring them here so that they'll come and explain to us all that we need to know about the tax regimes in Ghana. And so we have in-house participants, and then we have also some online. So we have about 40 or so. How many? 60 online. Okay, so they're also listening to us. We're expecting more to join us here. So before we go, can we have somebody giving us a voluntary prayer? Who will do that? Okay. Thank you.
So let's pray. Dear Father in heaven, give you thanks and praise for a day like this. We are grateful for life. We are grateful for health. We are grateful for a sound mind. Father, as we meet here to deliberate on issues that pertain to taxes, to engineering consultancy, dear Lord Father, create harmony, create understanding, and give us the insight that whatever we learn here will be impactful onto our country and generally create a developmental idea for us. We thank you for everybody who is here, those who are listening to us via email, via virtual platforms. We ask that you continue to extend your hand of understanding and insight into all of us. We ask that at the end of the day, we will not always forget to give you thanks, glory, and honor. In Jesus' name, have I prayed with thanksgiving. I say amen.
Thank you very much, my brother. We want to know ourselves briefly, at least from our side, and also just a brief introduction. I'll come to you. I'll first of all introduce our executive director, Engineer David Yante. Engineer David will be the chairman for the occasion this evening. And we also have the engineer Joshua Alote. He's the chairman for the structural subgroup of the civil technical division. And we have all our engineers also here. Let's wave. And those online as well. All right. So we also have our friends, some, I think, 5-man lady contingent from GRA, being led by our sister, who is in the person of Patricia Vivian Asari. So Patricia would lead the introduction of her colleagues who are here. Then we'll take it from there.
Good evening, ladies and gentlemen. I really wanted to talk about the introduction before. Okay, so
Sir, I forgot your name when you come to the
my name is Patricia Vivian Asari. I'm a Chief Revenue Officer in GRA Medina branch.
You have to make sure that GRA gets all the money cheap. So let's know the address for that, please.
I'm Samuel Akoto Payne. I'm also with GRA Medina, Principal Revenue Officer.
Okay, I related to Mr. Payne. Yeah.
Maybe we are linked somewhere. Emmanuel Kofikra, I'm also with GRA Medina CSC.
I'm Abdullah Yakubu. I'm also with GRA Medina. I'm a tax compliance officer.
Okay, so my name is Anuka Brandon Elvis. I'm also with the Medina TSC, I'm with the client service. I'm an ARO. Thank you. Assistant Revenue Officer.
Thank you very much. So we'll ask the chairman to give us an opening remark. Thereafter, we'll go to GRA to also give us an opening remark. Then we can start with their presentation. Today or this evening, they have 3 presentations. That is going to speak to 3 different areas about withholding taxes, how to register, how to be on the portal, etc. About 3 of them. So today we are going to be with them. We'll have probably 2 or 3 minutes health break. We'll just walk after every presentation. We'll come back. Oh, that's fine. Thank you very much. So Edie, before I go on, Edie, remind me of something. Do you have any of our past presidents online, please? You acknowledge them. Okay, all right. Thank you.
Hello. So we have the chair of our Engineering Council of Ghana, who is also a past president of the Ghana Institution of Engineering online. That's Engineer Dr. Boachi. We also have past president, Professor Hagan online. So thank you for joining. Members of the Ghana Institution of Engineering, ladies and gentlemen, good evening and a warm welcome to this seminar on tax issues jointly organized by the Ghana Institution of Engineering and the Ghana Revenue Authority. It is indeed a privilege to stand before you today as we gather to explore critical topics related to taxation in our beloved nation, Ghana. Taxation, as we are all aware, is an essential pillar of any nation's economic development. It is the lifeblood of our government's ability to provide essential services, infrastructure, and support for our society. Moreover, it plays a fundamental role in shaping the business environment, influencing investment decisions, and fostering economic growth. Today's seminar is a testament to the commitment of both GHIE and GRA to provide a platform for dialogue, collaboration, and learning on tax issues. Our aim is simple yet profound: to enhance understanding, encourage compliance, and promote best practices in taxation among our engineering community and beyond. Together, we will engage in thoughtful discussions, share valuable insights, and explore solutions to some of the most pressing tax challenges facing our members. From navigating the intricacies of tax codes to harnessing the potential benefits of tax incentives, it promises to be both informative and enriching. Our collaboration with the GRA signifies the importance of public-private partnership in addressing the multifaceted aspects of taxation. We appreciate the GRA's dedication to fostering an environment of transparency and efficiency in tax administration. As we embark on this journey today, I encourage each of you to actively participate in the discussions, ask questions, and share your experiences. It is through our collective wisdom and knowledge that we can contribute to the growth and prosperity of our nation. Thank you.
Thank you very much, Chair for the day, Engineer David Nyante. We'll also invite Auntie Vivian to come and give us an opening remark. Let's welcome her.
Good evening, ladies and gentlemen. We are here today as tax revenue officers for Medina office. So go through with you some of the issues that are pertaining out there. A lot of people ask questions. A lot will be discussed in relation to matters concerning tax issues, specifically on topics you chose. It's expected our education today will help improve the level of compliance of all of us present here. In as much as GRA are interested in raising revenue, we are much interested in helping taxpayers to be more compliant to the tax laws. This is because there's always amendments to the Tax Acts. And if you are not abreast with the changes and amendments, you always find yourself wanting. And when I talk of Tax Acts, in fact, these acts are our tools that we use in doing our work. And we have the Income Tax Act 2015, Act 896. Most of the things we do in the office is from here. In fact, it has been amended. We have a lot of amendments. As I said, if you are not abreast with the amendments and changes, you always find yourself wanting. Then we have the Value Added Tax Act 2013, Act 870. It's also one of our tools, very important. And we have the Revenue Administration Act 2016, Act 915. It's also one of the important tools. We have the regulations and the amendments and so on. In fact, with the acts, we have their regulations and we have their amendments. We didn't bring some here, but when you want some, you can go to the Assembly Press. We have them there and read through. Taxation is a broad issue, which will need more time. But I and my team will try our best to cover some portions of the topics on board. Actually, if we mean to go through the broad aspect of taxation, I think we have to take about 1 month. But we'll do our best to compress it and then attend to all your issues. With this, I want my team members to introduce themselves again, and then the topics they are going to take. So first of all, I start with the tax audits rep.
Thank you very much, Madam. I'm Samuel Akotopin, as earlier mentioned, and I'll be taking or leading the discussion on tax audits. Thank you very much.
Once again, I'm Abdullah Yakubu, and I'm going to lead or facilitate the discussion on withholding taxes.
So once again, my name is Anuka Brandon Elvis. I'll also be taking you through the taxpayers portal. We'll also be looking at the issues that have to deal with VAT. Then we'll look at what you need as a consultant or an engineer to register with the tax office. Thank you.
And we have our supporting staff.
Emmanuel Kofikra as a supporting staff.
So, now that I've introduced my team, I think I'm presenting to you the team, and then my team, I'm also presenting to you the audience. Thank you very much.
Let's give it to Auntie Vivian. Thank you very much, Auntie Vivian. All right, so our next item is to get into the presentation. They have 3 presentations. Okay, so these are going to want to run through the presentation as quickly as possible. Please, you note down your issues, questions, okay, as participants. Those online, you can post your questions in the chat box. we'll read it out to our GRA friends here. Those online, please, you post your questions in the chat box. And then those of us here, please kindly note your questions so that when they finish the presentation, we want to have ample time for discussions. So that it doesn't seem like if you don't take time, we allow the space for questions after every presentation, we may not be. So let's give it a time to run through the presentations and then we'll have time for the questions. Is that fair? That's okay. All right, so we have our first presentation on tax audits, tax audit. Is it simply tax audit? Okay, to be done by Uncle Payne. All right, so you have one minute. You can use it to navigate the slides. Thank you very much.
Okay. Good evening once again, and good evening to our virtual professionals who are also listening to us. I must say, we appreciate the invitation that you offered us to come and have a discussion on taxation. Anytime there's an invitation like this, an indication that the person who invited you is willing to be tax compliant. Other than that, he wouldn't even want to see you as a tax officer. But once he has invited you, means that he's willing to be tax compliant. So I'll say congratulations to all of you. And thank you very much, Chairman. Please, we will have a discussion on tax audits, and my presentation will start with the outline of presentation will be objective of our presentation. We'll look at why we are presenting on tax audits to our engineers. We'll also look at definition of tax audits. We will look at why tax audits, why we have to GRA, why do we have to conduct tax audit at all? Then selection of taxpayers for tax audits. What factors does GRA consider before we select somebody for tax audit? Then objectives of tax audits. We'll also look at types of tax audits. Then we'll take an overview of the audit process so that when you are going through audit, you know some of the processes, you can expect some of these processes. Thank you. Objective: to improve understanding of the tax audit process and engender cooperation among taxpayers and tax auditors. That's our focus for this discussion. We want us to understand each other. You understand us from our point of view, and as we have discussions and your questions also come, I'm sure we'll also understand you from your point of view. Then we can cooperate with each other when there's the need for tax audits. So that's basically why we are here. What is tax audit? We say it is an examination of an entity's or individual's tax return to verify the financial information, to verify that financial information is being reported correctly. We have three different explanations or definitions of tax audit. We'll look at all of them. They're basically talking about the same thing. But rather than highlighted return, and is to give us an indication that our examination is based on the tax return. And I'll take this advantage to also say that by our law, we are all supposed to, every taxpayer is supposed to file a tax return. So when the tax return is filed, some are monthly, some are annually, some are based on the event. As the event takes place, to file a return concerning the event. You are given some after the event to file a return. Now, so when these returns are filed, GRA will look through these returns and sometimes to select taxpayers. So it can be either an entity or an individual. And so if it's an individual, maybe you are a tax consultant, but you are operating as an individual, or you are a company, an entity. So we can select the company or we can select the individual for a tax audit. And then we'll look at your return that you have filed, what you have filed with us. We're in an era of, or modern taxation now is about self-declaration. We declare, we're moving away from where we need to assess you for you to come and tell us why our statement is wrong. No, we want to assess yourself. So in your return, it's an indication of self-assessment. When you file a return, in that you have assessed yourself, that this is my income and I the tax I have to pay. And when we look at these things, once a while we select some of them, and then we come to you and say, gentleman or Mr. Accountant, you filed this on behalf of your company. We want to see the figures behind the return. And then so we examine the records that you have. If it is revenue you have declared, we want to see maybe your sales records or your income statement, and that's the process. Then the second definition is that, so our intention is to find out whether it has been reported correctly, whether the return has been reported correctly. Because it's a self-assessment, you have assessed yourself and you have paid whatever you think you have to pay. So we will come and see whether it was correct using the tax laws and then taking the records that you also have. And an official examination of information that a person provides to the tax authority to check. An official examination of the information that a person provides to the tax authority to check that it is accurate and in conformity with the tax law. So every audit that we perform is gauging your activities against the tax law to see whether there was a need for you to pay some tax. So that's all that we don't have to do it based on what we think, but what the tax laws say. Then the tax audit is an examination of a return based on the underlying financial records to determine whether the returns are accurate. So basically the same thing. And these are sections of the law that talks about what we have, what I've mentioned here. Revenue Administration Act 2016, Act 915, as Auntie Vivian mentioned. Or from subsequently, when you see RA, it means that we are referring to the Revenue Administration Act 2016, Act 915. So section 36, section 28(1), and then section 124 and 125 of the Income Tax Act as amended. We will see over there that as individuals, we're also supposed to file returns. And even employees, as employees, we're also supposed to file returns. So whether you're an employer or an employee, you're also supposed to file returns. So that's why there, so that we audit all those, whether it is from an employee or wherever, it's possible for an audit. Thank you. Why tax audit? Why how if we are saying self-assessment, people have assessed themselves, say at the end of the year, I think this is how much I must pay. Or the company has assessed itself, the financial controllers think that the tax that due GRA. Why do we have to still come and say we are going to do tax audit? Modern tax systems are based on self-assessment and voluntary compliance. A tax audit program helps the Commissioner General to know that taxpayers are complying with the tax law. Now we are moving towards body taxation. So it's based on self-assessment and voluntary compliance. So when we do an audit, it will help us to know whether we are actually voluntarily declaring or complying with the tax law. Secondly, it is a mandate of the Commissioner General. The Commissioner General, with the exercise of powers under this Act, including Section 33 and 35, audit tax affairs of a person. Section 36, subsection 1 of the Revenue Administration Act 2016, Act 915 as amended. So this is a quotation from the from RA 36.1, Section 36.1. The Commissioner General may exercise of the powers under this Act, including Section 33 and 35, audit the tax affairs. So the Commissioner General has a legal mandate to audit every taxpayer. And as officers, we take our mandate from the mandate of the Commissioner General. A person who has audited may be re-audited if there are reasonable grounds. Inshallah, it's possible. Sorry. So if we have been audited and there are reasonable grounds that there were discrepancies or there were not true and fair, what do you call it, observations, or the data was not independent, or there are subsequent revelations concerning the taxpayer, and the period can still be audited again. So the Commissioner General has that opportunity to order power to. Selection of taxpayers for audit. Factors GRA considers. We have a lot of taxpayers. We can't audit all of you. but we still have to audit some. So we have our from the GRA point of view, we'll do what we call risk analysis, and then say, okay, based on this, let's take this person or let's take this company. So the history of a person with respect to compliance or non-compliance with tax laws. If your issues are, because sometimes we hear it on the media, there have been some impulse that duties have not been declared and paid on them and all that. Sometimes through the special prosecutor, sometimes through IOCO or whatever. So when these things come out, it's an indication that the taxpayer is not compliant. GRA will notice with such a taxpayer, and you can actually be, what do you call it, turned down for an audit because of the issues that have come out concerning you. And the amount of tax payable by the person. Maybe the person is paying so much tax. You ask yourself, so this is so much tax, assuming he's just under declaring 10% of it, how much is it? So much. So you also are somebody that will target you for audit. Because when you default a little bit, it will affect our target so much. Then also when you are declaring so low, you are paying taxes so low, and we can look at it and say, when we look at the industry standard for somebody who's operating in this industry, you shouldn't be paying this kind of tax. Something must be happening there. Let's go and find out. So that's also a possibility why we choose to do audit on you. Then the class of business or other activity conducted by the person, especially now that we have everything going virtual, who are doing any serious income virtually. So if you are doing a business and realize that you have started online businesses, it's an example of a risk area that we also want to know. Or you are involved in activity that you are taxed at different rates. Maybe some of your activities are exempted, others are taxable. We look at all those. You are also somebody that will want to visit it often before you declare taxable income as exempt income. So you are also will also be looking at people like that. Then the criteria developed under compliance management plan, which may include random selection of returns for audit. Then at the offices to our audit managers like Auntie Vivian, he will follow his plan for the year and say, I want to maybe audit 10 consultants, I want to audit 10 manufacturers, I want to audit 10 retailers, so they will do that. And sometimes just randomly select. Random, not based on anything, just select you and then for audit. So when you are selected for audit, it doesn't mean that there is an issue. It doesn't always mean so. The other matters that the Commissioner General considers relevant for ensuring collection of tax due. So other matters that any other thing that the Commissioner General interview at a time or within the period will think that this calls for a further probe into this business or into this person's tax affairs, we can organize a tax audit on you. The intelligence information and party information. We have an intelligence unit too. So sometimes we also inform operations about some of these things. Then third parties too. We have a third party reward system where some people can come and then give information that this person is doing this and it's not declaring to Ghana Revenue Authority. And so when you do it, we also have packages for people when it brings additional revenue, additional tax revenue. There's a certain percentage that goes to the third party. So that is also an area that we encourage everybody. If you have any information, you can bring it to the RA. Thank you very much. I hope you do that. Because consultants, I know you deal with a lot of people. Objectives of tax audits. Objectives of tax audit. We want to ensure compliance. Because it's self-assessment, if we are not visiting you to conduct tax audit, you can imagine, oh, these people will not come here since I started self-assessment 3 years ago, 4 years ago, nobody's coming. So you are just at the point that now reduce your level of compliance from 100% to 90, 90 to 80, 80 to 70, like that. Because nobody is visiting to check anything. So it's important that we ensure compliance, but once in a while, conducting tax audit. Then revenue collection is also where our main mandate is to collect revenue. So when we do that, usually it also yields additional tax revenue for us. So it's one of the reasons. And for statistical purposes, as an organization which also have international affiliations, there are international best practice standards. Like if you have a certain number of taxpayers, you should be able to audit a certain percentage within a year. So for statistical purposes, we also have to conduct the audits in order to meet some of these requirements. Then investigate inconsistencies. Right? Example, consistent loss with no threat to going concern. The company exists and has been existing for 10 years, has never declared profit. It's always declaring losses. So it brings some inconsistency. Where are you getting funds to run? I owe so much for 10 years and your client, creditors are not coming for you or what? What is happening? It doesn't, it's inconsistent with business that you keep making losses and you are still in existence, you don't collapse. So such a thing will also be one of the reasons why we want to come and check to find out whether it's true that you are making consistent losses. Then provide tax education. In ours, there is doing tax audits that you will have opportunity to be with a tax officer for a very long time. Sometimes audits can take more than a week, getting to a month. So all those occasions when you have issues with tax, you can engage a tax auditor to get understand about what's really tax or how the tax laws affect your specific line of business. Types of tax audit. Dex audit or Dex review. It's performed without visiting the taxpayer's business premises. It is conducted on the basis of accounting documents and information requested. This is an audit that we do at the office. We do not move out of our office to the taxpayer's premises. We may only call or invite you to bring us some documents. So we will conduct that. And then if there are issues, we will discuss with you. And then if there are any liabilities that you have to pay, you do it. We don't visit the taxpayer's premises. Then we also have field audit. It is performed at the taxpayer's business premises and performed as a comprehensive audit or issue-based audits, etc. So this one, necessarily the auditor has to move to the taxpayer's premises to conduct a field audit because it involves even observing the business activities, involve even observations and all that. So the tax auditors move to the taxpayer's premises to do the audits. So now we want to look at the field audit. We have seen two types. We have seen two types of audit: the DEX audit and then the field audit. So the field audit has types. So we want to look at the types of the field audit as well. Comprehensive audit is one of them. So it may be conducted on all tax types for various years, up to 2 years or more. So when we are coming to you, or when there's an audit and it's a type that we will call comprehensive audit, it means that all the tax types that you are registered for, we are most likely to audit all of them, or most of them. So maybe you are registered as an entity for PAY, you are also registered for withholding taxes, you are registered for VAT, you are registered for company income tax or personal income tax. And you can come and audit all of this within a certain period, and it can go as much as 3 years or more, depending on the circumstances. So that's the comprehensive audit. Then issue-based or technical audit, no more than one tax type, no more than 1 or 2 accounting periods. So we may come and say, oh, we are just auditing PY. We're just auditing PY of the company. And then we are auditing it for 1 year or at most 2 years. We have specific tax type audits. They say this is conducted on most recent reporting periods. So your return that you have filed recently, sometimes when we review the returns, we see that there's something, which has shifted so much from the usual, from your return. You can immediately come and audit only that one, only that return that has been submitted. So those are the specific tax type audit conducted the most recent reporting period. So it could be your company income tax or your personal income tax that you filed in 2022. We see something unusual about it. So it's possible you can come and audit that one, even though we might not have audited 2021. Then refund audit. Refund audit. That's what we said. A person may apply to the CG. CG here means Commissioner General for a refund tax paid in excess of tax liability. And we can do this for both direct tax and indirect tax. So if the taxpayer believes that he has overpaid taxes, he has paid taxes more than his tax liability, he can write to us to refund, can write to the Commissioner General to refund the tax. Now, when you write to the Commissioner General, the Commissioner General will conduct refund audit. And for indirect taxes, within 3 years, you can apply for refund. Within 3 years, you are paid excess of your tax liability. You can apply for refund 3 years. With the indirect tax and the VAT, it's usually for those who do export. You must export about 70% of your output, and then the rest be local. Then in that case, when you have excess of input tax over output taxes continuously for a period of 3 months, you can also write to the Commissioner General for refund of those taxes. So anytime you write for refund, it means that you are igniting the issue of refund audit. You have to come and do refund audit to what do you call it, affirm or agree with you that indeed you are paying excess tax, therefore we should refund it to you. Commissioner General should refund. Then others which include emergency audit. Emergency audit, it is performed that because of special circumstances, exist, and we proceed only with the permission of the court. So a Commissioner General can also organize an emergency audit. With the audits that I mentioned earlier on, Commissioner General will notify you that I'm coming to do an audit. When do you think we can come? Or I need this, I need that. But with emergency audit, we can come without notifying you that we want to come and do audits. And in some cases, we have to apply to the court for permission to do that. Tax audits generally have the following stages. So we are looking at the overview of the audit process for the auditee or the taxpayer. We can have the same for the auditor, tax auditor, but this one is from the perspective of the auditee or the taxpayer. So letter of introduction, to start with the letter of introduction. So the letter of introduction, officers for the audit identified, who have the names of the officers who are coming to the audit. Then assurance, there will also be an assurance in the letter of introduction that doesn't mean that you have done something wrong. That's why we have selected you for tax audit. Specifically, they will also let those specific area of the audit. Like I said, maybe if we decide to do an issue-based audit, we will let you know the tax types you are coming to audit. If it's comprehensive, we'll let you know all the tax types you are coming to audit. Then we'll let you know that is covered. Maybe you are auditing 2020, 2019, 2018, or you are auditing S2020. We'll let you know the period. Then we'll also have information document request. We will add a form or a document that will request information from you so that you have that in advance and then prepare your records. Then power of attorney, if you want somebody to act on your behalf dealing with the tax auditors, you also have a form where you give that authorization to that person. Then, so after the introduction, the next thing is entry conference. So the next process for the tax auditor is entry conference. This is an initial meeting between the audit team and the taxpayer or his or representative for the audit team to agree on the venue for the audits, the commencement date for the audit, the purpose of the audit, then initial interview, tour of business, or any other matters of importance. Now we'll look at some aspects of this, which I told, and we'll come to it, we'll look at it, and then interview to what we'll be looking forward to the interview, we'll come to that. So these are the things that usually come at exit conference. It means that when we select you for exit conference, for audit, we'll have previous slide. So what it means that when we select you for audits, there will be an entry conference where it's like officially we are entering your premises. So maybe we'll have our supervisor, maybe that will be with us to introduce us to you and to have a discussion with you on the audit. So that's the entry conference. And since that's all the issues. And then the rise of taxpayer, yes, I didn't mention the rise of taxpayer will also be spelled out to you before the audit begins, that you have these rights. Please can I go on? Okay. Entry conference. This is an initial meeting between I think we have done that. No. Okay. So the third one is interview, as we saw it earlier. With taxpayer or this is for the taxpayer. So we have an interview. The taxpayer gives us a representative to work with. We have an interview with the representative, or we have an interview with the taxpayer, and to gain understanding of the operations, the accounting system, the internal controls, etc. of the business. So that is why we conduct interview as part of our entry conference. We want to know, because you are doing your business, we are also somewhere. We have just entered like visitors. We want to know our way around. So we want to know the kind of activities that you do. Sometimes it helps us to update your records in the office because we become on the spot identify certain other line businesses or sources of income that is not known to us. So we'll come there. We want to understand your business operations. If you have branches, where do you have your branches? You operate, you do import and export or whatever we want to know. Then account system, you operate the manual system or computerized system, who develop the software, what are the controls, we want to know them. So you as a businessman, what do you do to make sure that you don't make loss? If you are dealing with stock, how do you make sure that your stock, the records that you have actually exist on your own? What have you put in place? Those are your internal controls. You want to see them, make judgments on them as to whether, because when your internal controls are working, means that our tax is safe. But if they are not working, it means that our tax is not safe. So we want to also test your internal controls. Then it is the observation and inspection of business environment by the auditor. This includes visit to warehouses, sales outlets, manufacturing plants, assets, etc. So the taxpayer will, the tax auditor request maybe that if you have a branch somewhere, will request that you send him or her to the branch to inspect how business is being done there. If there's an asset which is situated somewhere, any income for you, the tax auditor want to inspect that asset. Examination of records and documents. Examples, financial statements. You have the whole year, so this is my financial statement. This is the months that have come in and gone out of this business, or come into me and gone out of me in my attempt to earn income for the year. So we will look at the financial statement that your accountant has prepared for you. The ledgers, the ledgers and the trial balance, which are the sole documents to the financial statement, because we want to also state the credibility of the financial statement. We also look at the bank statement. We can also ask for the bank statement. We can ask for project reports, like engineers. You may have project reports. We also want to look at those project reports and see what the reports are telling us affects. We also want to look at receipts, invoices, payment vouchers, the minutes of meetings. Maybe as a consultant, you had a meeting with your client and agreed on certain things. We want to get to know the minutes and know which areas the tax officer should open his eyes on as far as minutes are concerned. The payroll records, stock records, contracts. You engage a client and you sign a contract. We want to know the details of the contract. So sometimes we ask for copies of the contract. Then engagement letters, as when your client engages you, the terms we want to do, and then many more. So during the audit process, the auditors may discover certain other transactions and may therefore require certain other documents that initially we may not have been the document request. Proposed adjustments. At this stage, the taxpayer is given the opportunity to respond to audit findings through proposed adjustments. Now, when we have examined the reports, we have done our interview, we have done all business, the tour of the business and all that, it may bring out discrepancies between the returns you have filed as and what we are also seeing. So when it happens like that, the auditor prepares something called adjustment form. Adjustment form. Tell me that PY for the year you paid 20,000. When we check the records, we're supposed to have paid 25,000. So it will propose an adjustment to the PY that you have declared. Or for income, declared a loss for the year. But that auditor goes to the reports, say that no, your record does not indicate that you made a loss. You rather made a profit of 1 million Ghana cedis. So also propose adjustment in that respect. So at this point, the auditor makes the auditee or the taxpayer aware of the discrepancies that he has discovered, as far as the tax law is concerned. Then the next step will be, so when it makes you aware, the next thing is say that as a conference, it is still, so at this stage, it will still be necessary in addition to any written responses. Sometimes the proposed adjustments will require that you officially write or you down your explanations in writing. So to the proposed adjustment, if you do not, sometimes you do not agree on certain things, we will require that you write to be part of the auditors' working papers, audit working papers. Then exit conference. Now, when all this has been done, we have a conference. It will still be necessary, in addition to any written response from the taxpayer, to have an oral of the audit. It also helps educate the taxpayer on the relevant issues of the law as they are applicable. So at this stage, we'll let you know we are coming to the conclusion of the matter. So we'll let you know that we are exiting. We are exiting, and these are the findings that we have seen. That maybe you can wait for your draft audit report or something of that sort. So the exit conference will take place. Then we'll have a draft report after. A draft report, then when a draft report comes and there are issues, the auditors must still have years for you, they must still have time for you to gather issues. When you, assuming your draft report, you should maybe show it to your consultant, or your account auditor or whoever, and then he raises issues. So those things have to be dealt before the final report comes out. So if there are things that the tax auditor has said, maybe based on providing additional information or documents, the tax auditor may vary his proposed adjustment. So it will not what reflect in the tax or draft report may not necessarily have to reflect in the final report if those issues have been settled and everybody understands more itself. Now, the report includes all facts, evidences, justifications that are of material importance when determining the tax liability of the taxpayer. When you receive a tax audit report, the tax auditor must let you know in your report that if he is raising 500,000 cedis as a liability for you in the year 2020 with respect to your PAY, he should let you understand why it is so. So in your audit report, maybe he will state that the directors were earning this income, but they were stated as this. So we have added it and we have calculated the taxes on it. So this, for the period of 3 years, amounts to 500,000. So we will let you know that. Then, so the provisions of the tax law and subsequent legislation that the auditors were guided by when determining the taxpayers' liability. It's fair that if you don't know and you flouted the law, he should let you know the law before he gives his assessment on you. So we will let you know that I, as the tax auditor, these sections of the law, and because of these sections of the law, you are paying this extra tax liability. The exact because when the tax liability are, so we must let you know if 2020 you didn't have a tax liability, you must let you know that your liability is not from 2020, it's rather from 2019. So the period, specifically where the liability is coming from. If it's a transaction that brought that liability, you must let you know specifically which transaction that you did. Maybe you sold an asset at the gain. You did not declare the tax on the gain. So we must let you know why it's raising the assessment. Calculation of the tax penalty and interest. You must let you know how he went about calculating his penalties and interest for you. The details of documents that demonstrate the liability to tax. So then content of any expert conclusion that the auditor may have relied upon. Maybe the auditor relied upon a document, like engineers, maybe we did, when we value or we did something for the taxpayer. And so it is on his record. The auditor sees it and says, oh, okay, this is the value that maybe quantity surveyor or whoever gave to you. And you classify the asset at this value. No, there has been a discrepancy with it. He checks and says that, oh, okay, this is income that hidden here. He asks it back, taxes it. So he must let you know if he relied on any document to give you any assessment. Then inherent in the tax audit report is notice of assessment communicating tax liability resulting from the audit. The audit report will also if there is a liability for you, inherent in the audit report will be what we call notice of assessment. It will have all the features of notice of assessment as the law says. And then it will be telling you how much tax liability you are owed as a result of the audit. 30 days to pay after which interest will be result. So after the audit report is presented to you, you have 30 days to redeem any tax liability or to pay any tax liability. That, beyond that, interest will start accruing on your liability. Then within 30 days of being notified, the taxpayer can object to the assessment or tax decision. Where the taxpayer is at any of the proposed adjustment, he or she will be informed of his or her rights to object to the decision and also to pay any tax not in dispute. So as part of the audit report, the auditor will also let you know that you have a right in 30 days. If you do not have the liability, you must right to dispute it. Right, then right now, so these are the, we have ended the audit process. Now we're looking at just the rights of the taxpayer. These are also help us when we are engaging taxpayers, so that you know that it's not like you are a thief and a policeman. No, we are parties. So you have a right. So some of the rights to confidentiality, whatever I see you with Alote and Sons Company Limited, you should bring to me and to be a Sons Company. Don't go to Mr. Entity's enterprise or consultancy and say what's happening between Alote and the auditors there. No. So you have a right to confidentiality, right to representation. If you want somebody to represent you, you want a lawyer to represent you, you want an accountant to represent you, or auditor to represent you, you have that right. Right to object and objection and appeal. You can object the tax assessment or liability. And then within that, you have to do that also within 30 days. There are laws concerning these things. You have to make sure you do it within 30 days. You must write and you must state specifically which aspect of the liability or which aspect of the audit report you are contesting. And when you do that, the law says that then you must pay all other taxes that you are not contesting. You must pay them. And then the one you are even contesting must pay 30% of it before we will now sit and look at the matter. Then, but in any case, the Commissioner General also has the right to waive this. You can decide, okay, even though we are required to pay 30%, I use my authority as the Commissioner General to waive that. Let's have a discussion and let's know what happened. So sometimes taxpayers come and plead that the Commissioner General should exercise its rights. This is my privilege. If you want to exercise it for you, fair enough. And the right to information on a person's tax affairs. Yes, you can write to GRA that want us to give you information as far as tax billings with GRA is concerned. You have that right to us. Then the right to request extension of time to file a return. Almost all the returns are time that you have a due time by which you must file them. So if you're not ready, you also have the right to write to Commissioner General, extend this time for me. I know it's due for me to present the task with them, but I'm not ready, so extend it for me. It's also a right. And a right to request identification of task officers. When a task officer visits your premises, visits you, you have the right to go to know the identity of the task officer. You can ask for his ID card. Right. So you see, we will see this at RA, that's Revenue at section 7, 16, 17, 42, 3, 10. You see all of it right there. Then also have obligations. The right to obligations. So some of obligations to maintain proper documents as required by the tax law. Some of us do not maintain proper records. Our directs are our source of records. So the employees even don't know what is happening in business, but the consultant knows everything. It's in his diary. Please, you are required to maintain proper records for business. To file a return, so by law, you are required to file a return. And like I said earlier on, now employees are also required to file a return. Then, to not provide false or misleading statement to a tax officer, you also have obligation not to provide false or misleading statement to a tax officer. You have obligation to register for tax as required under the tax law. So some of us who are earning income from other sources, you are an employee, but you are earning income from rent, you are earning income from maybe transport. You have that obligation to register with GRA that I also have this other sources of income and to file returns from them. Then to pay tax by the due date is also an obligation. You don't wait for the period to you don't let the period expire so that you have pay to expire. We have to declare it as a debt and then start changing, we start applying our compliance enforcement tools. So you know, please, let's not do that. So this was them as 27, 28, 46, 79, 80. Thank you very much.
Thank you very much, Uncle Payne. I think we'll take maybe 2 minutes. Let's just stretch and then we'll come back. 2 minutes. Let's interact. Yeah. Then who's supposed to be the next? Can you see too that he's presenting a presentation? Your question, I want to think. All right, can we please free on us? So you are ready, eh? So we also have Mr. Abdullah to walk us through the second presentation, which is going to be on, can we go to the brief review of withholding taxes under the law. I'm sure all of us and those online too, when you provide consultancy, the client will tell you, I've withheld 7.5% or 5%, depending on whichever it is. And then later they give you a kind of certificate. All right. So Mr. Abdullah will walk us through. And then also, as I keep saying, note your questions. When we get to the Q&A, you will give you the space to ask your questions. Mr. Abdullah, thank you.
Thank you very much. Once again, I'm Abdullah Yakubu. So as I said, we are going to have a brief review because withholding is a very broad area that we will not be able to do justice to it within this short period. But we're going to try as much as possible so that at the end of the day, we'll all be able to take something home from withholdings. So this is basically what I intend to do, or what we intend to do together. We'll look at the definition, the categories, withholding exemptions, and then something I saw in your flyer, withholding, double taxation. Double taxation is something that cannot even be done in one semester course. It's a whole area. But we'll try as much as possible to throw some light on it with regards to withholdings. How are withholdings related to double taxation? We'll do something briefly on that. So this is the main objective. Everybody should take something home. So everybody should be able to take something home on our withholdings under the tax laws. So I will take something home from you. You should also take something home from us on withholdings under our tax laws. So this is the brief definition of withholdings. As the name implies, withholding is simply about deducting taxes at source. It is a tax which is deducted at source by a withholding agent, a person required to deduct tax when making payment to a withholdee, a person receiving or entitled to receive payment from which tax is required to be withheld and accounted for later to the Ghana Revenue Authority. So in the network of withholding, there are basically three parties. There is the Ghana Revenue Authority, there is the withholding agent, and there's the withholdee. The withholding agent is the one who is supposed to make the payment. The withholding agent is the one to make the payment. The withholdee is the one the payment is to be made to, or the one entitled to receive the payment. And when we move on, you see the category of payments that you are supposed or mandated by law to withhold. If you don't withhold, and my boss and co come around to audit you, they will surcharge you for not withholding. So that is what we basically want to look at. So the Income Tax Act 2015, Act 896, as amended, identified 4 categories of withholdings. We have withholding by employer, that is section 114. We have withholding from investment returns, section 115. We have withholdings from supply of goods, service fees, and contract payments, section 116. And then withholding from consideration on realization of assets and liabilities. So this is just an amendment that came this year, 2023. Section 16 was amended by the insertion of 16A. 16A was inserted there by this particular act, Income Tax Amendment Act 2023, Act 1094. Then the last one is the Value Added Tax Amendment Number 2, Act 2017, Act 954, which amended Section 47 of the principal enactment by introducing value-added tax withholding. So there's also value-added tax withholding. The first four are income tax withholdings, but there's also value-added tax withholdings. So quickly rush through that. You can deal with your questions when they come up. So withholding by employer. Engineers are also employers. If you have your firm and you have employees, you are mandated under Section 114 of the Income Tax Act 2015, Act 896, to withhold tax from payments that are made to the employee or included in ascertaining the income of an employee from employment. So if you have an employee, you are mandated, because the language of the act is that shall withhold tax from the payment of an amount to be included in ascertaining the income of an employee from employment. And then we use basically two different rates for permanent employees. So we have the graduated rate, as you see it under, for resident individuals. And for non-resident individuals, we use a flat rate of 25%. As we move on, we may have to look at who a resident individual is and who a non-resident individual is. So this is the current graduated rate. An amount of income is free of tax, that is 402 cedis. So if you are an employee and your income for a month is 402 cedis, is exempt from tax. But an additional 110 cedis you make will tax it at 5%. An additional 130 again will be taxed at 10%. If you earn another 3,000, we tax it at 17.5%. If you earn another 16,395, it will be taxed at 25%. 29,963 will be taxed at 30%. And exceeding 50,000, you are taxed at 35%. So these are the monthly rates. When you multiply them by 12, then you get the annual rate. This is what we use for what we normally call our PAYE, the monthly filings. But when you are an individual, a resident individual, and the year ends and you have to file your personal income tax returns, you will have to use the annual rate, which is just these ones by 12. So this is a continuation of Section 114. So Regulation 5 of the Income Tax Regulations 2016, LI 2244, is on the amount to be withheld by employers from overtime and bonus payments. So you have your employees, they have their normal income, but some have done overtime. And then you're also going to do bonus payments. How do you handle that? So for overtime payment to a qualifying junior employee, you will have to withhold at the rate of 5% if the amount does not exceed 50% of the basic salary for the month. Or you will have to withhold 10% from the excess of the 50%. And then we'll have to look at who a qualifying junior employee is. A qualifying junior employee will first of all have to be classified as a junior employee by your organization. And then secondly, the annual income of that employee should not exceed 18,000. So if you're a junior employee and your annual salary is not more than 18,000, then you are a qualifying junior employee. And as a qualifying junior employee, when you do overtime and the payment to you doesn't exceed 50% of your basic salary for the month, the tax on it is just 5%. If it exceeds 50%, up to 50% will be 5%, then the excess will be 10%. And these withholdings will be final. So when it is final, what it simply means is that it will not be subjected under any further tax treatment. It is considered that the tax withheld is enough for the liability. So when you are filing your income, your returns, you are not required to include that income again, because the withholding on it was final. If the employee is not a qualifying junior employee and he does overtime, that tax will be by the graduated rate that we have seen earlier. There will not be any concessions. He will tax it using the graduated rate. However, when we come to bonus, the regulation 5 talks about overtime and bonus. So for bonus payment, if an employer makes bonus payment to an employee for a year of assessment, if this payment does not exceed 15% of the annual basic salary of the employee, the withholding on it is supposed to be 5%. If it exceeds 15%, then the excess will have to be added back to the employment income of the employee and tax using the graduated rates if the employee is a resident individual. So when you are paying bonus, when the year ends and you are paying bonus, if the bonus is up to 15% of the employee's basic salary for the year, the tax on it is supposed to be 5%. If it exceeds 15%, then up to the 15%, you tax at 5%, then the excess, you add it back to the employment income of the employee and tax using the graduated rate. So what that simply means is that if on the graduated rate, I'm already at the 25% ban, and then I have excess, then the up to 15% will be taxed at 5%, and the excess you tax it at 25%, because that's where I am on the ban of the graduated rate. So the tax withheld here is also final. When you withhold the 5% from the employee's bonus up to 15% is final. I mean, this a continuation of section 114. So this one is regulation 6 and 7 of LI 2244, the income tax regulation 2016. This one is about casual and temporal employees. Casual and temporal employees. And this one, the Income Tax Act drives its definition from the Labor Act. So section 78 of the Labor Act in 2003, Act 651, defined a temporary worker to mean a worker who is employed for a continuous period of not less than 1 month and is not a permanent worker. You are employed for a continuous period of not less than 1 month, but you are not a permanent worker. So for temporal employees, the withholding is in accordance with section 114 of the first schedule to the Income Tax Act. So if you are a temporal worker and you earn income, it is treated the same way as a permanent worker. If you're a resident individual, you apply the graduated rate. If you're a non-resident individual, you apply the flat rate of 25%. The second one is a casual worker. According to section 78, a casual worker is engaged on a work which is seasonal or intermittent and is not for a continuous period of more than 6 months and whose remuneration is calculated on daily basis. That is a casual worker. So if you have casual workers, the withholding responsibility on you is to withhold 5% from any payment that you are making to them. And then that withholding will be treated as final. So withholding from investment returns, that is section 115 of the Income Tax Act 2015, Act 896, as amended. It is to the effect that a resident person shall withhold tax at the rate specified in paragraph 8 of the first schedule, where that person pays any dividends, interest, natural resource payments, rent, royalties to another person, and the payment has a source in this country. And the payment has a source in this country because the two basic principles of taxation is residence and source. If the source is in this country, we can tax it. If the person is a resident, we can also tax it. So basically, this is withholding from investment returns. So if it is dividends, the withholding is supposed to be 8%. If it's interest, it's supposed to be 1% or 8%, depending on who is involved. Then natural resource payments is 15%. Rent is 8% or 15%, depending on the property. Is it for residential or non-residential? If it's for residential, then it is 8%. If it is for non-residential, then it is 15%. And royalties, 15%, provided the source, the income has a source in this country. So, but this section 115 does not apply to payments subject to withholding under section 114, withholding by employers, payment made by an individual unless in conducting business. Payment made by an individual unless in conducting business, interest paid to a resident financial institution, or a payment that is an exempt amount. Any payment that is an exempt amount under the laws will not be subject to these withholdings. Okay, so this is the next one, withholding from supply of goods, service fees, and contract payments. So we're going to look at section 116, subsection 1, and then we'll also look at section 116, subsection 2. For section 116, subsection 1, as amended, is to the effect that a resident person shall withhold tax at the rate provided for in paragraph 8 of the first schedule, where that person pays a service fees with a source in the country to a resident individual, as fees or allowances to resident director, manager, trustee, or board member of a company or trust. And the rates, you look at the paragraph 8 of the first schedule, is 20%. For examination, invigilating, supervising an examination, or part-time teaching or lecturing, as an endorsement fee, as commission to a sales agent, as a commission to a resident insurance sales or conversing agent, the rate would be 10%. And then B says that pays a service fee or an insurance premium with a source in the country to a non-resident person. I want the withholding obligation will be 20%. So the first one, section 1161, talks about persons. So both individuals and entities can withhold. That is section 116, subsection 1. But this one, section 116, subsection 2, is to the effect that a resident person other than an individual. So under here, an individual cannot withhold. It's only entities that can withhold. So companies, partnerships, and trusts, they can withhold under section 1162. Other than an individual shall withhold tax on the gross amount of the payment at the rate specified in the first schedule when the person makes a payment to another resident person who does not fall within subsection 1 or section 114. For A, supply or use of goods, B, supply of any works, or C, supply of services. So if you do not fall under what we saw under section 1161, then you will come here. But under this one, it's only entities who are allowed to withhold and not individuals. In respect of a contract between payee and the resident person, subsection 2 applies to a contract between a payee and a resident person where the amount of the contract exceeds 2,000 currency points. So under here, if the contract sum does not exceed 2,000 currency points, you are not under any obligation to withhold. However, for the purposes of determining whether a contract meets the 2,000 currency points threshold, two or more contracts in respect of the same goods, works, or service shall be treated as a single contract. So if you have given a number of contracts which are under 2,000 currency points, so just like 2,000 Ghana cedis, that's it. That's the currency points. So if you have given related contracts which are not up to that, and we put them together and they are up to 2,000, the obligation to withhold should have arrived. So section 116A is an insection. So the principal enactment is amended by the insection after section 116 of withholding from realization, consideration on realization of assets and liabilities. So section 116A is to the effect that where a resident person other than an individual pays consideration to another person with respect to the realization of an asset or a liability, which does not fall under section 115, the resident person shall withhold tax on the gross amount at the rate of 3% for a resident person and 10% for a non-resident person. This came in the 2023 amendment to the Income Tax Act. So it's an insection after section 116. So withholding VAT. So the Value Added Tax Amendment number 2, Act 2017, Act 954, amended section 47 of the principal enactment by the insertion of 47A, 47B, and 47C. So 47A is on appointment of a value-added tax withholding agent. And the law is to the effect that the Commissioner General may, in writing, appoint a value-added tax withholding agent for the authority. So unlike the income tax withholdings, where when you are qualified, you withhold, you don't need to be appointed. For value-added tax, you need to be appointed by the Commissioner General before you can withhold. You have to be appointed by writing. Okay, so we're on 47A, appointment of a value-added tax withholding agent. And the point was that, unlike the income tax withholdings, for value-added tax, before you can be a withholding agent, you should have been appointed by the Commissioner General in writing to be a withholding agent for VAT. And B spells out the duties of a value-added tax withholding agent. If you are appointed a value-added tax withholding agent, these are the duties that you are supposed to perform. The appointed agent shall perform the following duties. 1, withhold from the payment to a registered VAT trader 7% of the taxable output value of the standard rated supplies. And at the time of making payment for the standard rated supplies, issue a value-added tax credit certificate in the form prescribed by the Commissioner General to the supplier. So when you are appointed a withholding VAT agent, these are your obligations, or these are your duties that you are expected to perform. You are expected to withhold from standard rated supplies. So we still have the standard rate, which is 15% together with the levies, NH Fund COVID-19, and the flat rate of 3% plus 1% COVID-19. However, the amendment to the Value Added Tax Act now makes it say that even if you are a supplier of goods and your turnover exceeds 500,000, you'll be migrated from the flat rate to the standard rate. Originally, suppliers of goods were just on the flat rate, irrespective of your thresholds. You meet the threshold of 200,000 and you're registered, you have to continue to be on the flat rate of 3%. But now, if you meet 200,000 and we register you, the moment your turnover exceeds 500,000, you'll be migrated from the flat rate of 3% to the standard rate of 15%. And it's also important to note that when you withhold and you make payments, you have to issue a VAT withholding credit certificate in the form prescribed by the Commissioner General to the withholdee. And these are the scope of the VAT withholding agent: VAT registered entities whose supplies are zero rated, and selected government and other VAT registered entities. So the appointment is when you are written to by the Commissioner General appointing you as a value added withholding agent. This 2017 Act also amended Section 52 of the principal enactment by the addition of Section 9, because the returns for value added tax are expected to be filed or required to be filed on or before the last working day of the month following the month to which the returns release. But with these withholding, they added Section 9, which says that you have to file your withholding VAT returns and make payments by the 15th of the month immediately following the month to which the returns release. So if you are a VAT withholding agent, you will have to file your withholding returns by the 15th of the month, and you can now file your VAT returns itself by the last working day of that month. So all withholdings are filed by the 15th of the month following the month to which the returns release. Statement and payment of tax withheld on tax withheld or treated as withheld. So when you withhold taxes under the Income Tax Act, Section 1171 is to the effect that the withholding agent shall pay to the Commissioner General within 15 days after the end of each calendar month a tax that has been withheld during that month. And then the two says that while you have to pay, you also have to file a return within 15 days. And when you fail to file, it attracts a penalty. And when you fail to pay, there will be interest. So failure to pay will bring interest, which will depend on the principal. But failure to file brings penalty, which does not depend on anything. Even if it's a late return and you fail to file it, the penalty is 500 Ghana cedis. and to be at 10 Ghana cedi for any day that the return remains unfiled. That is how it is calculated. Withholding certificates. Section 1181 of Act 896 stipulates that a withholding agent shall prepare and serve on a withholding certificate in the prescribed form. So there is a prescribed form that if you are a withholding agent and you have withheld taxes from a withholdee, when you make the payment to the Ghana Revenue Authority, you are supposed to prepare and serve the these withholding agents. Ghana Revenue Authority will prepare the form for you, the certificate for you when you make your payments. However, with our current regime, in filing the withholding return, if the withholdee's TIN or Ghana card number is provided, the withholdee's ledger will be credited directly, and there will be no need for the withholding certificate. Originally, if you had filed and paid on behalf of the withholdee, you needed to supply the credit certificates to the withholdee to take to his or her tax office for them to credit him. But this time, if you are filing the return and you provide the TIN or the Ghana card number of the withholdee, then the withholdee will be credited directly. You don't need to send the certificates for them to credit the withholdee. Then final withholdings, because some of the withholdings we do are withholding on account, and some are final. Those withholdings which are final, like I said earlier, will not be subject under any federal tax treatment. Means that the withholding is enough to satisfy the tax liability of the withholdee. So that will end the transaction. But if a withholding is on account, means that when you are filing your return, you still have to add back that particular transaction or payment. Then you determine the tax and you can take the payment as payment you have already made. So these are some of the payments or some of the payments which are final. So dividend paid by a resident company, rent paid to a resident individual under a lease or land or building with a source with or without fittings situated in the country other than rent received by an individual in conducting business, sale or letting. Rent other than rent received in conducting business of sale or letting paid to a person other than individual under a lease of land or a building situated in Ghana with or without fittings and fixtures. So rent is final, but when you pay rent, when rent is associated with business income, it is not final. If you conduct renting in a way that is business income, withholding on it will be on account. Final withholdings are normally supposed to be on passive income. If the income is active, the withholding will be on account. So if you have built hostels and you have put people there to maintain them, and then you run them as a business, renting them to students for some periods, and you are conducting it as business, it might be business income and not investment income. And when it is business income, when you are withholding, you withhold on account and not final withholdings. It will be service, then you have to withhold 7.5% and not 8% or 15% final withholdings. Then there's an addition of winnings from lotteries. You withhold and it is final. So payment made to a non-resident person that are subject to withholding other than payment derived by a Ghanaian permanent establishment. So all payments made to a non-resident person other than payment that are associated with a Ghanaian permanent establishment will be final withholdings. All right, so I want us to also go quickly through some of the exemption procedures associated generally with income tax, and then withholdings in particular. So number one is charitable organization, Section 97 of the Income Tax Act. Section 97 of the Income Tax Act exempts entities that are incorporated as limited by guarantee, charitable organization from the payment of income tax associated with the core business. But before you can do that, you need approval from the Commissioner General, because the section is to the effect that the Commissioner General may approve an entity as a charitable organization for the purposes of the Income Tax Act. And then Section 2, subsection 2 then spells out what is required for that entity to be approved as a charitable organization. And it is only when you are approved as a charitable organization that your core income associated with that business is exempt from tax. Because sometimes when you are exempt from payment of income tax as a charitable organization and you go into business, you go into activities that can be classified as business, that activity will not be exempt. So exempt from of 5 years. So if you are a young entrepreneur and you are into any of these areas, you can apply to the Commissioner General for the exemption. And the Act defines a young entrepreneur to mean an entrepreneur who is not more than 35 years old. So exemptions for withholdings. Because I know some of you have withholding exemptions. Withholding exemption is a special dispensation that is granted on exceptional grounds. So the withholding taxes for which the exemption is considered are the 7.5% withholding tax on supply of services, the 3% withholding tax on supply of goods, and the 5% withholding tax on supply of works. These withholdings are on account, And if you have any reason to believe that you are overpaying taxes as a result of these withholdings, you can apply to the Commissioner General for withholding exemption. But there is a stringent criteria that you have to meet for the Commissioner General to exempt you from withholdings. And once you have withholding exemption, what it means is that you cannot be withheld from. A withholding agent cannot withhold from you, but you are still mandated to withhold as a withholding agent from withholdees. So if the Commissioner General gives you withholding exemption, no withholding agent, if you have the letter, should withhold from you, but you will continue to withhold as a withholding agent from withholdees. And like I said, it's basically considered on these three withholdings because they are withholdings on account. And because they are on the gross contract sum, they do not take into account your expenditure and other allowable deductions. So as a result, you could generally be overpaying taxes as a result of this. And if you have a reason to believe that you are overpaying taxes, then you apply to the Commissioner General for withholding exemptions. But like I said, before that is done, there is a stringent criteria. You should have been audited at least within the last 3 years to ascertain that you are actually overpaying taxes. Your directors should be on your PAYE schedule and should be earning salaries no less than 10,000 a month. And then what we put out. So these are some of the things. If you don't meet them, the Commissioner General will not grant you the withholding exemption. Okay, so this last thing that we saw in your flyer, withholding double taxation. So I just want to touch briefly on that so that when it comes to the questioning session, we can dilate more on it. Withholding and double taxation. Double taxation is a technical area, unless otherwise we are just talking about the English meaning of double taxation. Because when we are talking about double taxation, there are basically two types: economic double taxation and juridical double taxation. Economic double taxation is permitted by the tax laws. And economic double taxation is where one income is taxed more than twice in the hands of different persons. That would be economic double taxation. The same income, but it is taxed more than once in the hands of different persons. So a company makes profit, the company is taxed for corporate income tax. The company decides to share dividend to shareholders. They will also be taxed on the dividends. So the same income, but different hands. Or now we have even introduced the Growth and Sustainability Levy, which you have to be taxed on your gross profit before tax, before we then tax you on your corporate income tax. So that is economic double taxation. So our tax laws, not only in this jurisdiction, do not infringe upon economic double taxation. So economic double taxation occurs. But what the tax laws try to avoid is juridical double taxation. And that is where one income is taxed more than once in the hands of the same person across different tax jurisdictions. So for instance, our Income Tax Act under Section 3 makes the income of a resident individual or a resident person taxable globally. So if a resident person in Ghana, wherever you enter you earn your income is subject to tax in Ghana, provided you are a resident person. Your income everywhere in the world is subject to tax in Ghana. So as a result, we also tax based on source. So as a result, you may earn income outside Ghana. And because of the source, even though you might not be a resident in that country, because of the source principle, they may tax that income because it was sourced from that country. Then when it comes to our notice that you earn that income outside, we will also tax it. And that will constitute double taxation. And that is what the laws have provided remedies for. So when that happens, you are entitled to either a deduction or a tax credit. A tax credit for a tax that you paid outside, or you may choose that the tax that you paid outside should rather be an allowable deduction from your income. So for those juridical double taxation issues, the laws have made provisions for them. But for economic double taxations, the laws do not infringe upon economic double taxation.
All right. Thank you very much, Mother. You can be on your seat. Going to have the last presentation. Then so can we have the next presentation, please? We'll have Mr. Anuka help us through this presentation. I hope you are noting down your questions. Hey, I can see a lot of questions in the chat box. It's for tax issues. That's it. All right, Mr. Anuka, thank you very much. Yes.
Is it working?
Yeah.
Okay, good evening once again. My name is Anuka, as earlier on said, and I'm going to take you through. Okay, my presentation are in two forms. There's one that has to do with the slides, and there's one that I'm going to take you through the taxpayers portal, where you now be filing on your own. You'd also be filing your annual returns, all tax types and everything will be done online. So I'll teach you how to do the filing as well. But first and foremost, let's go through these ones to help us with. So you will help with the slides. So let's see. So the first thing we need to do is to look at, we are going to look at three things under the slides that we have. We have what we call the looking at overview of taxes in general. We'll also look at, no, let's go back. Let's go back. We also look at, how do you call it, VAT. Then the last thing we look out for is also looking at issues that relate with registration of businesses. So please let's go to the next slide. Okay, so I would have loved to do this to know your expectation from this slide, but as my colleagues have done already, I'll just skip this so that we can go on what is left of. So my presentation will have to do with who a taxpayer is. Please don't worry with the slide, we'll share them. When we are done, we'll share the slides to everybody. So then we'll also look at what does it to register with the Ghana Revenue Authority. Then we'll look at what documents are available to attest to the various registrations with the Ghana Revenue Authority. Then we'll look at what is a value-added tax under the regime that we have, that is the law of Act 870, which was enacted in 2013. They have the types of VAT schemes in this country. Then we look at the requirements for VAT registration. Then we look at particular issues which relate to engineers and then contractors as we have it. So let's go to the next slide. So the first thing we want to know is that who is a taxpayer? Simply put, I would say that a taxpayer is anybody that has got a liability with the government as far as taxes are concerned. But let's look at what the definition of the law then says when it comes to who a taxpayer is. So the law says from the Revenue Administration Act that a taxpayer is a person liable to pay tax, as I had said. Are you okay with that? So if you are a potential person, be it that you have been born today or you are dying to go, God forbid, and you have any liabilities, you are a taxpayer to us. And that is why when it comes to tax, the tax officer is always looking out for everybody. If you go and make donation in church and we realize that your donation is above a certain level, we'll be asking, apart from putting something in God's coffers, what about government's coffers? So acts of that. Yes. So under that, look at the Revenue Administration Act says that we have these are the items that we look out for when we are talking about generation of liabilities. The first thing we look out for is what? A duty. And in this sense, when we say duty, it has to do with when you are bringing things from other countries or when you are importing things from other jurisdictions. Whatever you import into this country, we need to know whether these have got what tax implications. And if there are tax implications thereof, then even if you do not deal in any other activity within this country, but you do only importation, then you are also a taxpayer. Are we clear with that? Then the next one also has to do with levies. I hope when I say levy, there's one thing that really rings a bell here, the e-levy. Okay, it's a levy that we have to pay. Now, there's a difference between tax in general and then a levy. Levies are directed towards a particular aspect of the economy or a particular thing that needs to be done. So, for example, we all understand that the e-levy, it is purposely meant for cushioning some eventuality that have occurred because of the coronavirus and all other Ukraine and Russian war as well. Okay, right. They also talk about charges. Sometimes the authority also charge you for failing to do one thing or the other. Okay, so for example, you are supposed to file your returns, you don't file them, there might be penalties and interest that you need to pay. You are supposed to have deducted some PAYs you didn't deduct. Authority can also charge you. These all what solidate to what we call what tax liabilities. Are you okay with that? We also have what we call the rates. When we get to VAT proper, we realize that we have two schemes. That is the flat rate scheme and the standard rate scheme. So a government can also put in place certain rates for you when you engage in certain taxable activities. Are you okay with that? They also talk about what? Fees. Okay, so when we come to the GRA Revenue Authority, there are certain things that when you charge fees. For example, how many of you have registered your companies recently? Where you charge the registration fee of 10 cedis for companies and then registration fee of what? 7 cedi, 50 pesos for what? Sole proprietors. This all goes back to what government coffers for national development. They also talk about what? Interest. Now, when it comes to taxes, when you fail to pay government money, as we all know, when you get money from somebody to do a business, a loan, what do you pay the person? Interest, right? So if you also use government money and you're supposed to pay within a certain date and you fail to, government also receive interest from you. Are you okay with that? Then the next thing we talk about the penalties. Penalties, as the name defines, is saying that penal points for people who fail to submit their returns on due dates, on or before. The emphasis is on or before the due date. Now, the reason somebody will ask you, if I fail to submit my return on or before the due date, why should government punish me for it? Do not forget that government depends on these returns to what? Adjust budgets. So if you do not give government the clear picture of what is pertaining to the country, he does not have what? The power or the authority to decide on what to spend on and what not to spend on. So if you so do that, you are deferring government expenditure, which also what? Will make government unpopular. So government does not want to what? Carry that burden of being unpopular. So we share the unpopularity allowance. That is why you also have to what? Have some penalties to pay. Are you okay with it? And the last thing then says that apart from all these things that will make what a taxpayer is, we are engineers, so we understand that technology sometimes can fail. So it's in order. When we get to some part of my presentation that has to do with withholding, I'll skip them because my brother has dealt with that already. But then we'll have another avenue to discuss them when we get to the question and answers. Are you okay with that? So then it says that any other amount imposed by a tax law or to be collected by or paid to the Commissioner General under a tax law. So in summary, what we are simply saying is that everybody who engages in a productive activity within this country is a potential taxpayer. Are you okay with that? And you will definitely accrue certain tax liabilities, which we will need to collect. So now going home, know that everybody in here is a taxpayer. Those who are born are taxpayers, because it is said that there's only one thing in a country that you cannot escape from. That is what? Taxes. Okay, let's go to the next slide. Okay, so we now want to look at what does it take to register with the Ghana Revenue Authority. Most often than not, when people come to our authority to register, they are asking themselves, what are some of the things that we need to qualify us as our taxpayers who are registered under the jurisdiction of the Ghana Revenue Authority? Most often than not, the idea is that we think that you need to have documents from the Registrar General's Department to register with us. But when it comes to sole proprietors and individuals who want to register with the authority, the main thing that you need at this point in time is what we call your TIN
formally, and now what called the what? Ghana Unique Identification Number. The short form is GUIN. If you have that, you don't really need. It is not necessarily that you go to the Ghana Register General to get what? A business registration. You can simply register as what? A taxpayer with just your Ghana card. Are you okay with that? It's for the very reason that sometimes you want to have a trading name. That is why you want to go to the Register General's department to go and get your business registered. Are you okay with that? But not for that reason, you can register with your Ghana card simply with us. Are you okay with that? Now, the next thing you also need to do is now, so if you know that you can register with that, when it comes to companies, you need to get what we call the TIN for the company, which is the TIN simply means the tax identification number. So for companies, you definitely see that when it comes to companies, you have the C followed by 00, then some other numbers, and all forms of 11 digits. So always look at that when you are filling forms with the authority. The TIN is supposed to be what? Of 11 digits, including the C. Are you okay with that? So then we look at some of the aims of registration includes to record the particulars of the taxpayer for identification purposes. Are you okay with that? The first. The next thing is also to eliminate and prevent what? Multiple registration. When we started registering for individuals, especially, the unfortunate thing that we realized that some people register in Accra and hardly when they have another business to do in, let's say, Secondary, they go there to register. So we found out that there are certain people who had what? 12 teams. Some people had like 3 or 4. So quickly, the system was made in such a way that when we capture you as an individual with more than one team, the system will integrate all together. They will give you just one and eliminate the rest. So that wherever you find yourself, the reason simply be that wherever you find yourself across the country, whatever activity that you engage in, you can simply track your activities and then also what? Accurately measure your liability level. Are you okay with that? Going from there to, now we have what's called the Ghana card, which is more integrative than the TIN. Now the Ghana card, if you need a license, you have to have a Ghana card. If you want to register a land, you have to have a Ghana card. If you want to import things, you have to have a Ghana card. So it is more integrative than the TIN. So what we have done, or what the authority has done, is now to say that we are going to migrate all your information that you had on your TIN onto the Ghana card. So you realize that some years ago, or last year thereabout, use your TIN for all your transactions. But now sometimes when you try logging into your TIN, it will tell you that you cannot access it. The reason being that all information on your TIN have been integrated and migrated onto your Ghana card. So going forward, I would advise that most people who have challenges of that sort should quickly rush to their nearest tax office for what? An update on their Ghana card. Are you okay with that? The Ghana card is also used in what deducting on the withholding for what? Employees, sorry. So we realize that now if you pay your employees and you have the right Ghana card for them, you will not need to give them anything to prove to them that you have held from them. You can simply find out on their portal. And as my brother rightly said, you now file your return as individuals. Regardless of whether you are a director or not, you need to file your return as individuals. So this year you need to file. For example, any of you sitting here might want to secure a land. You go to the Lands Commission, it will tell you that, oh, you have got to the indenture stage. The next thing you need to do is that now get into the certificate of the land, will require you to bring what we call the tax clearance certificate. You cannot have a tax clearance certificate if you have not filed for the last 3 years as an individual. So I advise that most of you who are in engineering, especially those of you who are into real estate and all that, try to advise your client to also quickly get their Ghana card registered so that they can file their returns. They also look at it to also issue and manage tax identification numbers, as I said. So we are now migrating all your data from what? Those who even started with that earlier on, but their file numbers. We are migrating from the file number to the TIN, and then from the TIN to what? The Ghana card. So that we get to a point in taxation where it is so robust that if you end up doing any activity anywhere that you think that you want to sneak your Ghana card out, and it has been made such a way that you cannot also escape. Without the Ghana card, there are a lot of things that now you cannot do. Are you okay with that? So we are getting to a point where taxation is more of you declaring than we imposing any tax liability on you. Because whatever you do at the end of the day, it will show clearly through your Ghana card. The e-levy through your Ghana card. So don't forget that some of you, because you have linked 1 or 2 of your phone numbers to that of your bank accounts, There are certain transactions when you do them to your phone number and bank account, you don't have any debit charges. Am I right? But if you don't link them, if you have a second number, you don't link it, try that transaction, you suffer the 11. Are you okay with that? This is what we are talking about. We are moving forward by doing what? Integrating our systems so that it become more robust. They also have what called effective management of our tax information. Any serious organization would definitely want to be informed on its decisions. So is also the Ghana Revenue Authority. We want to form a decision that we take, because don't forget that one of our hallmarks is what? To be fair in whatever taxes that we exact on you taxpayers. So for us to be able to do that, we also have to have what? Full information on what is happening. Are you okay with that? Then we also talk about the last thing, to promote voluntary tax compliance. It is said that everybody given the rights would want to outwit a system, so they know that the system cannot be outwitted. So if that is done voluntarily, indirectly, you have to what? Comply with the system if we identify with what? Sin. The main item needed for registration of what? A taxpayer, as I had said earlier on, is what? Your Ghana card or your TIN. Once you have that, you are good to go. But then for companies, you need to go to the Registrar General's Department, where we have a desk there that will register you and generate a TIN for you. Now, some of you also run churches. Now, churches sometimes do not pay the income tax, but they pay for their employees. Now, to pay for your employee, you need to have what? A TIN for the organization. So with that, you quickly have to go to our desk at the Registrar General's Department to get a TIN for your organization. Sometimes, if you come to our offices, it is allowed for us to generate TIN for organizations. So what happens is that when we can generate a TIN for church, especially churches. But when it has to do with business, you have to go to the Registrar General's Department. Are we okay with that? Okay. So for want of time, there are certain things that I'll just skip. So let's move on. Let's move on. Right, now let's look at some of the documents that are available to you taxpayers that attest to the transactions that you have with us. The first document here, where everybody is so much interested, is what we call a GRA certificate of what? Registration. Now, when you register with us, we'll give you a certificate that shows that you have registered with the authority. That certificate has your TIN or your Ghana card. It has your name, if it's an individual, your name, or if it's a company, the company's name. And then it also has what? A trading name for individuals. Are you okay with that? Then the next document we have is what we call the VAT certificate. Most of you have seen that when you go into certain premises like the malls and all that, there's a VAT certificate that is normally in what? Engraved in how do you call that? Sort of a picture thing. This certified that a certified VATable person who's supposed to collect what? VAT from what? The end consumer. Now, do not forget that when it comes to VAT, the incidence of that tax is on the final consumer. The person that holds this certificate is just supposed to collect that tax from what? The final consumer. Are you okay with that? Then the next one that we have is what's called a tax clearance certificate. Most of you who are in contracts, mostly if you don't have a tax clearance, you cannot bid for a contract. So you will take this thing very seriously. Now, a tax clearance certificate is simply telling anybody that holds that certificate in their hand that this taxpayer has paid all his tax obligations or has made it a point. And the point is saying that you have deliberated with the tax authority and made arrangements to how much is left of you to pay. And there's an agreement. So sometimes do not think that because you have not been able to pay all your liabilities, you cannot secure what? A tax clearance certificate. You can have an installment plan. For one reason or the other, if you think that your tax liabilities are more than what you can pay for now, you can simply come to our offices, you see the compliance and debt management, they would have a payment plan for you, and you end up paying accordingly. So on your tax clearance, you realize that it's normally looking at 3 years of what? Your current assessment. So we have, for example, in this year that we have 2023, we have 2023, 2022, and 2021. If you have cleared all your liabilities, you then have what? The right to secure a tax clear, or if you have made arrangements to have your liabilities cleared. Then the next one we have is what we call the withholding tax certificate. Now, this withholding tax certificate is normally given to the sufferer of withholding. That is you who are, and most of you here who are in contract have that experience. When you execute contracts for people, They are supposed to pay an amount, but will end up taking some monies and giving you a certificate. In those days, it was what, a pink sheet and a yellow sheet attached. You touch the pink one, keep it for yourself, and then you bring the yellow and the two sheet to us, and we put it on your file, and it defrays some of your what, income tax liability. You remember when my brother was talking, he said something about final withholdings. But there are certain withholdings that are not final, because after you have what, suffered those withholdings, you still need to what, conclude your liabilities from what, the entirety of your declaration. Are you okay with that? Then the last thing we do is what we call the withholding VAT letter. Now, withholding, we do not really give certificate, but the Ghana Revenue Authority, under the powers of the Commissioner General, then says that if you are somebody that we have designated to withhold VAT, would give you a letter. And anytime anybody suffers a withholding from your end, you would give the person a copy of that letter, so that when you are filing your return, as far as VAT is concerned, then you then add a copy of that to us, so that when audits are carried out, we are much convinced that already there's a withholding VAT that you have suffered from. And this is the letter that backs that. So please, I always say that when it comes to taxation, do not be afraid of the tax office. Just make sure that when you are coming, your documents are up and upright. Are you okay with that? Okay, let's go to the next slide. So then also, what is the value added tax under the law? Value added tax under the law, which is Act 2013, Act 870, Section 1, says that there is to be imposed by this act a tax to be known as the value added tax, to be what, charged on one or a supply of goods or services made in the country, or other than exempt goods or services. Now we are saying that if you deal in any good or you render any service in the country which has got some value added to it, then definitely you are what, liable to what we call the value added tax. Except those goods and services that government, through the Ministry of Finance and in consultation with other authorities, have been told that these goods should not be taxed for one reason or the other. These goods are called what, or goods or services are what we call the exempt what, goods or services. Are you okay with that? We also have what we call the what, the zero rated goods or services. These ones, we not say that they are not taxed, but they are taxed as a rate of what? 0. Are you okay with that? They also talk about the import of goods or import of services other than exempt imports. Some of our parents, some of our fathers and brothers also import goods from other countries. These goods are important in this country. They are going to consume by members of these countries, of our country, sorry. They are also supposed to what? Suffer what we call the value added tax. Are we okay with that? Then we have, so I believe that's why I said that we go back to what exemption goods and services with respect to what contract and civil what engineers. We look at that at the latter part of the presentation. So Section 2 also states that unless otherwise provided in this act, which is what the Act 870, the tax is charged on the supply of goods or services where the supply is what? A taxable supply. Are you okay with that? And the next is what? It is also made by a taxable person in the course of a taxable activity. Now, these words might seem very simple, but they are not when it comes to their implications to tax. Now, when we say a taxable supply, okay, it goes back to tell you what the taxable supply constitutes of what? Goods or services. Are you okay with that? So when you hear the word taxable supply, it in simple terms refers to what? Being a good or what? Service. Then the B says that made by a person in the course of a taxable activity of that person. The person who is undertaking the service, who is rendering the service, or who is supplying the good, is the person we call the taxable person. Because once it's going to supply a good or a service, it also then means that he has some tax liabilities to suffer. Are you okay with that? So in your definition, if you are taking anything home today, know that when we talk about VAT, that's what a person undertaking a taxable supply and what? Doing it as a taxable person. Are you okay with that? You cannot tell me that paying your child's fees is what? A taxable activity. Would that amount to taxable activity? No. Are you okay with that? So there are certain specific activities that are designated as what? Taxable activities. Let's go to the next slide. So now look at the VAT scheme. When we talk about VAT, we know that we have two basic schemes. We have the VAT standard rate scheme and the VAT flat rate scheme. The VAT flat rate scheme Before the introduction of the COVID-19 1% was just 3%. Are you okay with that? Then government introduced the 1%, now making it what? 4%. But most often than not, when it comes to engineers who are rendering services, yours is more to with what the standard rate scheme. Now, first, you used to hear about the 12.5, 12.5, but now, all that the enactment of the law that was passed in May, it is now 15% for VAT. But let's go through the calculation simply to understand how the calculation is done. The law says that when you have a subtotal or an amount that has not yet post VAT, you first charge for levies, and you have 3 levies. Are you okay with that? These 3 levies are the first levy, the COVID-19 of a 1% on the subtotal. Are you okay with that? 1% on the subtotal. Then you charge another 2.5% for get fund as a levy. Then you also charge another 2.5 for what? National health insurance as a levy. When you have charged all these and you put them together, you have what we call 6% for all the levies put together. The law says that the amount you got for charging all these levies, add them back to your subtotal before you charge what? Your 15%. Are you okay with that? This is a place where sometimes people have a difficulty. They're asking themselves, why do I have to pay tax again? But let's not forget that we said that from the beginning. We said that levies have got specific purposes in our economy. So therefore, we regard them as what things you have enjoyed or you are certainly going to enjoy. So they are value that you have created for yourself already. So they are not taxes, but they are levies. Are you okay with that? That's why we charge 15% on all of them again. Are you okay with that? Okay, so let's go to the next slide. Say. Okay, so let's look at requirement for VAT registration. This issue always comes up when it comes to, especially not just engineers per se, but people who are to government contracts, who are subcontractors. The issue then happens that some of their activities necessarily should not be under VAT registration, but as a requirement to secure or bid for a contract, they will ask you to tender in a VAT certificate. So most definitely, some contractors will come to you, but this activity is not supposed to, but it is a requirement. Then let's look at what qualifies you to become what? A VAT registered person. So it says under Section 6 of the Value Added Tax Act, it says that Section 6, subsection 1, except otherwise provided in this act, a person who is engaged in a taxable activity and is not registered for tax purpose shall register 1 for tax supplies exceeding 200,000 Ghana cedis. If the activities of the person within 12 months or less is presumed to exceed 200,000 Ghana cedis, then by law, that's to register. It also then says that if you divide 200,000 Ghana cedis by 12, if you make within a month any activity that exceeds a revenue of 50,000, then you have to also register by the law. You are qualified to register for VAT. Are you okay with that? It also then says that you can also voluntarily register for VAT, but it also has its own implications. If you voluntarily register for VAT in either of the schemes, be the flat rate scheme or the standard rate scheme, you would have to be with the authority for not less than 2 years before you can deregister. This is where we are saying that if you commit yourself for one reason or the other to register with us voluntarily, you cannot leave as and when you wish. You have committed yourself, so we also have to commit you well. So with that, you have to be with the authority for not less than 2 years. They also say that for anybody to register with us for VAT, the cardinal thing that we have here is what? You have a physical place of business. But then somebody will definitely ask that, what about those who are doing virtual trading and all that? Then what happens to them? The authority always takes care of things like that. So we say that a physical place of business, by extension, and looking at the development of trade that goes virtual, should be a place where we can easily reach you. So you can even use your home or your abode as your physical place of business. It is accepted if you are doing virtual trading. Are you okay with that? Good. Then we also then talk about the very fact that you have to keep proper accounting records related to your business. This implies that if we are going to register you for VAT and you do not keep the proper accounting record, then at the end of the day, you can understate what you sold or mistakenly overstate, which is often rarely the case. So you can understand that for that reason, you might not register for VAT. They also talk about the fact that you need to submit regular and reliable returns as required by Act. My brother explained earlier on that when it has to withhold, you have 15 days to submit what your return after you have withheld, or somebody has started withholding from you. When it comes to VAT, it is said that you have a whole month for transactions that were transpired last month to submit your returns. That is what a whole month working hours, working days to submit your return. If for any reason or for any standard procedures, the authority defines that you cannot submit a return on due date, it could be what standard or it has to be registered for VAT. Are you okay with that? Then it also talks about what? Be a fit and proper person to register. Now, the fitness and the properness of you being able to register for VAT sometimes has to do with your health, especially when it has to do with your mental health. Are you okay with that? Because if this person himself is not mentally sound, how can he be precocious to talk about what? Submitting returns. Are you okay with that? Okay, let's go to next. So then we talk about peculiar issues with respect to registration for contractors and civil engineers. Now, at this juncture, we are always deliberating on the very fact that people will do huge sums of contracts for people and they withhold some amount and you don't understand. First, they will withhold. You say they are not huge. Okay, I have seen some. That's why I'm saying that. Now, when they withhold from you, you don't have a problem of why they this amount from my contract sum, and what do I get from this withholding? So the peculiar issue when it comes to contractors mostly is has to do with what? How much is withheld from you, and when do you suffer withholding, and when do you not suffer withholding? For the very fact that my brother has discussed withholding, I'll leave this for deliberation when it comes to questions and answers. The other section that I have to use is has to do with the portal. So I would wish that if I can access the internet so that we use that to do. And then at this point, who would want to volunteer with the taxpayers portal?
I don't have that. Unless I bring my laptop.
Okay, if you can connect it. Has anybody else? I don't want to use somebody else's information. The password. But can you connect your laptop to this one?
Yes.
Okay, but I'm suspecting that somebody has got. So there is no attack like. Can I use the machine? I can log in here. Yes. No, I don't. Yeah, okay, let me get one so that I can use that to test. Yeah. So I'm just getting it. So, but this will remain with us because it's a taxpayer's details. We don't need to. Taxpayers portal. So the first thing you need to know is that you have to have a link. Okay, you can simply Google it. It's just say that you just type taxpayers portal. Okay, it will take you to the portal. Now, while he's trying to log on to it, let me explain what the taxpayers portal is all about. Before the inception of the internet and all that, you realize that most of you had to come to the office, come and file your returns and do all that at your physical presence with the office. Now, they are saying that we are all going digital. So we going digital simply means that everything that you used to do at the office, you can now do it at the comfort of your home, provided you have what internet access. Are you okay with that? So you simply have to go to your taxpayers portal. And when you enter the taxpayers portal, the first thing you see there, as he has just shown us, the first thing you see there, look, the first thing you see there is what? Taxpayers for GRA. Then, no, this is Ghana.gov. This is for payments. No, just go to taxpayers portal. The first one is, yes, exactly here. See. So when you come here, this is the first thing you would see. Now, as we said from the beginning, Okay.
The guy administrative support.
Yes. Yes. So as I was saying, I would love to use somebody's, but it's not proper. As I said from the beginning, okay, confidentiality is a matter of essence. So what I'll do is I'll practically take you through it without somebody's, so that I'll just use about 5 minutes to take you through. Now, when you get in here with your TIN or your Ghana card identification number, now your Ghana card identification number is what you have a GHA dash, the figure you put it in there, then you have a password you put in there. Now, when you enter into the taxpayers portal, there are 3 key things that you notice there. The first one is your status or tax status. It gives you a summary of all the tax liabilities that are due to be filed. It also gives you a position of all the liabilities that you need to pay for. So the first one talks about what you file for, and the second talks about what pay for. Now, the next page talks about what pay your tax liabilities. Now, that gives you a holistic summary of everything you need to pay for. But because of the new system integration, what is happening is that your tax liabilities definitely start from 2021. Those of you who have been with us before the inception of the new system, I would endeavor that you always come to the office to clear all liabilities before 2021. Because what will happen is that at a point when the whole system is robust, you might come for a tax clearance, you won't get it, and you think that I don't have any liability sitting there. The reason being that you have some liabilities that are sitting there beyond 2021 that you need to clear. Are you okay with that? Now, after moving from the taxpayer's liability point, you also have what forward. You can request for your tax clearance online. Now, you don't need to come to the office to request for a tax clearance. But the only thing that will hinder you from getting a tax clearance when you have certain liabilities that are sitting on your portal. So, for example, your income tax, we know for income tax, it's divided into 4, and you pay them per quarters. But if you come to the authority and you have not paid to the current quarter, automatically the system will buy you from getting a tax clearance certificate. Are you okay with that? Also, one other thing you also have to do is that from the taxpayers portal, you can even make requests and you can also ask what questions, and they will be answered there. You can even, so for example, you inviting us over here to give you this presentation, you could have just requested through the taxpayers portal. So in sum, what we say, the taxpayers portal is more of the tax officer has brought to your doorstep by what? Assistant over the internet. So that whatever you have done in the office is now done online, so that we are more tax efficient and more tax compliant. So at this juncture, I want to say I'll close my presentation.
Thank you very much. Thank you very much, GRA. We are grateful to your team for this very insightful education. So we'll zoom to questions and or comments. Probably me being the MC, I'll ask mine first. I was sharing with Auntie Vivian that there are times I think that it's not that simple when it comes to engineering business. We have those who are sole proprietorship, we have those who are LTDs, and those who are partners, okay? Those who have, and then when it comes to the contract administration or pricing regime, some of us are typically price quotation, some are based on percentage of a contract, all right? Now, when it comes to the price quotation, there are details. You realize that the engineer's typical income is probably writing of the technical reports. Okay, maybe drilling wells, somebody has to, you outsource drilling wells, somebody does it. Laboratory, somebody does it. Your real income there is probably 5,000. That is the writing of the report. Now, assuming my work, the total sum got to, let's say, 60,000. And I give it to Auntie Vivian. She wants to put up a 3-story building. Now I have to calculate about 21% of that 60,000 as taxes. Okay? So the question is, 21% of, let's say, 60,000 is probably around 12,000, 13,000 thereabout. And you present it to a client. They look at you and say, I won't pay. You are getting to pension and you want to put up a building like that. And this is how much you need to pay because it's a requirement that you got a geotech report. Now the client says, I won't pay the VAT. If you pay the VAT, I'll go and give the job to somebody else who's not even in the tax bracket or even the tax quarter, doesn't even have. Then you lose the job. I have had occasion where your friends from the other office call me, you have not been filing VAT. I say, yes, I don't have the job. Because when you put the VAT component on it, it simply blows up and the clients, they don't want to pay. It's a big issue for us, for me especially, because my consultancy is more of price quotation. It is not a percentage of any contract. So I don't know how you can help me address this. And even if I ask maybe Mr. Payne that I'm charging 60,000, pays 20% as, says, will you do that? Will you pay? Honestly. No, I'm being very frank here. No, it's serious. Because see, as I was telling you earlier, some entities, they are 20% or even 60,000 is just petty cash for them. So if they may not even let it be so much a big deal in their books. See, then I will lose out the job because I want to charge VAT and I'm registered as a VAT to charge VAT. Then I lose out, they go and give it to another engineer who is not even paying taxes. So how do you help me address this? That's my first question. I'll come back with another question. Maybe we'll ask 3 questions, then okay, I'll come to the dialogue, then I'll pick here. Or we finish, almost everybody has a question. We'll go to online and then we'll come back here.
My question is like a scenario. As an engineer or a consultant, most of my jobs or the work I get comes through competition. I compete, I may lose or win. If I win, then I get a job. If I don't win, I don't get a job. No matter how much money I have used to compete. I mean, to compete means I may do drawings, I may do feasibility studies, I may try to get people to work for me. All this time, I'm pumping money into it. I go into the competition and I don't win, I go out with nothing. But then, if maybe 2 years, 3 years, I don't have any job, then one time I realized I may have to associate or link up with other consultants, maybe Aloti Consultants, Fifi Limited, or they Limited. Then we come together, they ride on my back, and then we come together and we go for the competition and we win the job. Now, whatever work is done between the 3, among the 3 of us, so that when the money is paid to my company because they were all riding with me as a company. When the money is being paid to me, a tax is withheld out of it. So now, the tax has been paid. The rest, I have it. But I didn't work alone. The 2 other companies work with me. So now we are sharing the revenue. I have to give them their portion. If I give to Fifi's Limited, I'm supposed to also withhold another tax. If I give to Odell Limited, I must withhold another one. That is what I called the double taxation. Withholding tax after the withholding tax. That is what I call it. If I don't do it, then in the end, those taxes that I'm supposed to withhold from them after the major one has been withheld will be taken back from me again. That is my issue about this thing, double taxation, withholding tax after the withholding tax. So I will need explanation for that one. So that is my question.
I'll ask, then I'll come back.
All right, so I'm Fifi. Mine is similar to Engineer Lote's own. So what if you've set up a company and for about 3 years you haven't got the contract? You know, when I set up my little something, I went to the tax office around Lima, and they wanted to open a file for me and charge me something. And I said, I haven't gotten a job. And they don't believe me. Look at young men like this. You should have job. So, you know, they'll ask you for this years, how have you survived? It's just by assisting others. You will do a working drawing for someone, it gives you something small. It's not like you've gotten a job or anything like that. So just like you're saying, can I be in the system? If I get a job right now, I require a tax clearance certificate. Will I get it? How do I explain my situation? Thank you.
Okay, that's fine. I think mine also has a bearing with it too. You see, as a contractor, you know, mostly we do government jobs. Now, I do a job, maybe 2020, I've done a job. I got paid in 2020, and tax, the total tax is withheld. And then maybe I go to 2021. I'm still in the job, but I haven't gotten any payment. Now I need a tax clearance. Maybe 2021, February, March, I need a tax clearance. I come and you tell me that I haven't made any payment in 2021, so I can't get tax clearance. Meanwhile, my work is such that if I am not paid, I won't be able to also pay tax. But I go the whole year, before 2021, I might not get paid from any client. But you will not understand. You say that, look, once you are in 2021 and you haven't made any payment, you cannot give the tax clearance certificate. That's one. Then second question. As I'm standing here, the portal that he was talking about, I got paid in November last year. As I'm talking to you, I haven't, the payment I got has not reflected. I haven't gotten a tolling tax in my portal. I go to my client, the client tells me that now they are not giving a hard copy. So GRA, they are supposed to do the, and then I'll get it in my portal. I don't get it. I go to GRA, I want tax clearance. I said, no, you haven't paid any tax. So we will not give you. Meanwhile, due to no fault of mine, I'm not getting the clearance certificate because my client tells me that GRA is no more giving a hard copy. They will do a soft copy and I can get it in my portal. And I go to the tax office, and the tax officer is also telling me that because the thing is not there, he won't give me my clearance certificate. This is a problem, a genuine problem I'm facing. I lost a tender because of this. I lost a tender because I couldn't get the tax clearance certificate. Even though the payment had made, my client had made a payment, and he had gone to pay the withholding tax to GRA. I couldn't get the tax clearance certificate, so I couldn't make the tender. This is a genuine problem. As I'm talking to you, November last year, the payment was made. As I'm standing here, I still don't have the tax clearance certificate for those payments. So I think it's really quite frustrating.
And mind you, most of us, our payment is tied to government paying contractors. So if government hasn't paid contractors, we don't even get paid. So I'll pardon.
Thank you. It still has to do with the VAT. Sometimes you'll be there, they will call you, just like our work is for about a year, you don't do work, 6 months before you are paid. Then they will be asking you, why are you always filing nil, and become a concern. I had a feeling that probably their section also don't have a clear understanding about our work. So they also need a kind of education that consultants as it is, you can even go through the whole year and you still have to live on the previous. So that is also another issue. Probably they are treating us as people who are working, and every month you must file, but our system is not like that. And the next follow-up question has to do with the holding tax, filing holding tax. Do you have to file it every month, even if you don't have anything to pay? Just like the VAT.
All right, so please, you can respond.
Okay, the first question. We can look at it from two angles. We have a situation where you, as a consultant,
You do your work, you prepare your reports, you are paid a fee for the work you have done. And we have a situation where the total amount is given to you. You decide on who does which work and how much you pay the person. In that case, the total amount given to you becomes revenue that has been given to you because you decide on who comes to do which work for you and what amount I'm paying that person, which becomes like a cost you incur in making that revenue. So in that case, the VAT will be on the entire amount. But in a situation where you do the work, you prepare the report, yours is only the service fee that you charge. Then the VAT will only be on the service fees. I don't know if that is clear.
What I'm saying is that this is how it goes. It's price quotations. Probably, let me use mine as a typical case. You have mobilization, you have field work, and you have professional fee. Okay, so mobilization is getting a car to take a machine to site. The field work is doing the actual field work plus laboratory stuff. Those are things that I don't control. I can give it to you to do it. Do you understand? My typical input is the professional, because I'm a technical person, I'm going to collate the data to write the reports. So but I sum everything together to get a total and then apply the rates. See, so, but depending on the magnitude of the input in terms of the field work that you do, that determines the total. Then when you apply, some of the clients, when you see that value, that is the problem. It's not so I'm thinking that, you see, you mentioned this flat rate thing. I wanted to ask a question later on about that. You talk about somebody making a minimum of 200,000 is paying some level of, I think when you were sharing, yes, you'll be surprised that some engineers like us will not even get that 200,000 cedis as income for a year. So you need to look at that VAT regime so that if I'm building developing my quotation, I can plug it in the prices without clients seeing that I need to pay a certain VAT in there. Because when they see the VAT, it's just push them off. So that if I'm to pay, let's say 3% flat rate or 4% flat rate, I develop it within the content of the items. The key thing is that I have to put to you. I give you my every project, the quotation that I come up with, so I can know how much really was involved, including all the expenditure. I think we should be able to do something about it. We should be able to do something about it. Men's real. Because no, if what, yeah, go on.
So yeah, like you have just explained, the angle I was coming from, let's look at someone who is also doing a buying and selling. You know, you buy these goods at a cost and sell them at a certain price. However, you are going to charge the VAT on the entire revenue you are making from the sale of goods. That person has also incurred some costs, which will be the person's cost of sales. So in the same case, like I was saying, if the entire amount is assigned to you, you decide on who comes in to do which work. Then in that case, you have control over which expense you are incurring and who you are making those payments to.
It's not really the issue. That's not the issue. The issue is whether I'm assigning it to my sister here or here. We have a total figure of, let's say, 100,000. Now, you are to pay 21% as taxes to increase it to 121,000. Now, the client sees and says, look, it is too much. I can't pay. So he takes the job from me, go and give it to Uncle Payne, and who is not even paying taxes because he's working. He's an engineer. He can work with PRS to do some small consultancy. You understand? So I lose the job. So when I go and I find nil, you call me and say, these days you are filing nil. And these are the implications. So they are typical issues. I think that engineering consultancy is not a kind of one big umbrella. Most government projects or development projects like a building going up, you can charge percentages. My work is typically price quotation. Okay, so please, you need to help us.
Thank you very much. Let me attempt to offer some explanation here. And the understanding I'm getting is that you engage the services of other professionals in order to build up costs and then charge your clients. And all those will end up increasing the amount, not all for you, because you have to pay some people for something, and then you calculate the VAT on it. The issue that is arising here is that because those that you are paying for services are not charging VAT, or they give you service without VAT, you are not able to take input. So if you were able to take input, you have to deduct all the cost of the input from the pricing before you now add your service fee and then now charge. So you realize that the charge, your 15% will not be on the gross amount, but you may have to take away the inputs that you have suffered from other people. So your price come down a bit. Then when you file your returns, you can take those inputs as a deduction from your output, and the eventual VAT liability will also come down. I don't know if this satisfies.
Agree with you. You see, Uncle, the typical problem in this country is that we are fortunate to go to school and want to be more tax compliant. I tell you, there are people who don't know anything about taxes. My work, I employ laborers who do pitting for me. Master, when I go to site with them, they say they are charging me 1 2, I'm going to take them tax, they'll kill me. No, I'm seriously telling you. These boys, you go to site with them, Macy's, you say maybe tax or did the 120 a day. Also, no, it's not going to work. So it's a big problem. So that times we close our eyes and tend to absorb some of the things that we are supposed to. That's why, from your angle, it's difficult to say I'm going to deduct this guy taxes. It's not an easy tax.
When the auditors will ask for your bank statement, which will reveal all other payments that you have made for these services, and they'll ask you where's the corresponding VAT. So he can never do without withholding the VAT to the other people. Let's say the bulk payment is in his account, 121,000. And then if he's going to pay these other services like you suggested, he can pay them without the VAT. But when he is being audited, they will need his bank statement, which will show that there's payment A to company A and B to company B. You would ask him where the corresponding VAT is.
If he is paying,
yes,
and he didn't suffer any VAT, we don't have any issue with that. But if he is charging somebody and he does not charge the VAT, that's where we have an issue with
this. Your answer is purely theoretical. Practically, it doesn't work.
No, let me come. Let's understand it. The playing field is not level to some extent, and we must all understand that. And that is why our brother was talking about Ghana card use now to make it more robust. To get to a point, your laborer and the folder tell you, I want you to do that for me to see. Because other than that, not be able to renew his license, the driver's license, you cannot renew it. So we are getting to that level. So those of us who understand the situation, let's help us to all move together.
But we must survive before we get to that level. Ask you survival questions. Yes, if we are getting there in 5 years, we must survive for the 5 years.
So let me also just make some inputs. So I understand your concern, and it's really a concern, but our current regime doesn't actually address it, because that apply that you should get everybody registered and paying the VAT, so that a client would run away from him before he's charging the VAT and go to another person who is not paying the VAT. So if we get there where we get almost everybody registered for the VAT, then it will solve this problem. But for now, frankly, the system doesn't make any provision for you that because you are registered and somebody else is not registered, and because they may run away from those who are not registered, you should not pay the tax. You will have to pay it. Maybe you have to assist us, get information on these other people who are not registered and the clients are running to them, so that we also put them on the tax. So that when we get to a plain truth that all of us are on the tax, they will no longer run away from the other person who is not registered for the tax. Otherwise, the current regime as we have it doesn't make provision for you, like because you are not registered for VAT and he's not registered and you are registered and they are running away from you, you should not also charge the VAT. The system doesn't allow us to do that. And the 3% that you were also talking about, because the law is very clear, if you are in services, when you start, you are starting with the standard rate. It is only those who are in supply of goods who will start 3% plus 1% COVID-19. And when they get over 500,000, we migrate them to the standard rate. But for services, however small, when you meet your 200,000 people and we are registering you, we are putting you on the standard rate. We cannot put you on the flat rate. That is the law for now. And I share your concern because that standard rate is very punitive. The fact that you have to calculate the levies and then put them back. So eventually, it's not even going to be just 6% plus 15%. It's going to be more than that because you have to add back the levy before you put the 15%.
Okay, so we address that. So our brother also talked about the very fact that he has executed a contract that has gone past 2 years. Then he goes to them and they are telling him that the withholding is no longer given to them physically, but it's done on a virtual platform. Last November, okay. So let's address, as my brother rightly said, we are a developing country. We are not a developed country. Some of these things we have to just sit on them like that. Like when you have a bill, sometimes you have to just hold it like that. Then you also agitate. That is why we have a dialogue. Okay. Let me give you a history behind the VAT. When VAT started first, it went straight to the standard rate. Then our brothers and sisters who were at Abuso Kai and Makola and those places said, it means me kind of calculation, they mean to me, I can't keep records. So government, with that hindsight, they said that, we will not do just a standard rate scheme, but we'll inculcate to it one, the flat rate scheme. As you are agitating today, you might think that it is ending here. When we finish this, we'll write a report. It will definitely be submitted to our boss. He will submit it to the head office. The head office will down tailor that to the Ministry of Finance. Whilst we are doing that, some of you have got friends at the Ministry of Finance, you have got friends at other places. You also make noise on these things. At a point, we all come to a very pragmatic solution to the problem. But as it sits now, as he has rightly said, we are just like messengers onto the Constitution. That just like you. So what we do is that let's keep on joy, and let's keep on hoping for the best. And as you said, keep on encouraging your other colleagues to also register for the part and all that. When we all have a level playing field, then we can move on. Yes. And then also, and then to finish with yours, the withholding, right? Now, when you go to them, make sure that they keep the right thing of your company. We had I don't want to mention the institution, it's a very big institution. Last month, a very big institution in this country had help from almost to a tune of about 4 million Ghana cedis. Unfortunately, for most of the people who suffered the withholding, they couldn't get their withholding certificate because their things were not inputted right. When you do not input the thing right for the withholding, it does not reflect, it does not correspond so that you have what? A debit at your side. So I would always encourage that when you go to them, encourage them to also input the right details. Are you okay with that? Right.
When it was, they were giving the hard copies, I was getting the certificate. It's when said you have migrated to digital platform. That's when I'm having the problem. And I don't even know the tax office where my client pays. I can't go there because it's supposed to be the client. It's the client that's supposed to go there and make sure that they pay the withholding tax, and then you input it and then it reflects. So I'm coming here today. I wanted to confirm whether now it has been done. I checked. I went to the client. The client said, look, we can't do anything. It's GRA that's supposed to do it. So I was even saying that whereas we were doing this digital, it should have been going along with the manual so that if there's a problem, you can still give the manual certificate. Why should work on it until it is 100% or 90% proof that now there's, because look, apart from the certificate me not getting the certificate, sometimes you even go, it can be a week until the system is down. You can't check anything. The system is down. That's what they tell you. Go, the system is down. You can't enter the portal, you can't do anything. Meanwhile, you have a header, you have I mean, it's very frustrating. So you could have been doing this along with the manual one until everything is set. Then you said, okay, now everything is set. If they won't be able to, then we can work on the digital one. Are you getting it? And then I have a client, most of our clients are government agencies. You are a government agency. I bring you an invoice saying that, oh, maybe Get Fund has paid me. This is the invoice. They have deducted 5% withholding tax. What stops you from interacting with Get Fund to confirm that, okay, if this client brings an invoice saying that you have deducted, they confirm, you go ahead, if the person is test clearance. Organization. My office is in Ashama.
Thank you very much. But thank you for the concern, but if you have issues with GRA, please, let's all write, or let's notify it here to our portal. What an issue you are mentioning, if you write to us, it can be resolved easily. Because whoever your client is registered taxpayer, isn't it? You can go into his ledger and assess the withholding return that he filed. We will see your name and the amount he has withheld. We will pass an adjustment and credit to, oh, wow, and we'll write it. That's all.
They spoke. They spoke.
Please, let me stop you there. Don't when you want issues to be addressed with GRA, right? It will get to the appropriate people. Sometimes you come to me at the front desk and you bring your issue to me. No, I'm reporting to answer. And if you may have more knowledge on the issue than me, then I will deal with you like that because I don't know. But if you write a letter, it will go to the office manager. The office manager will look at the concern and see which certain officer should deal with it and unit it to that person. It will follow the process and it will be dealt with. But if you just go and for the person there, you know, have the knowledge of it to display his ignorance, tell that, oh, do this, why? So please, let's
okay. Yeah.
So if you can easily be done.
Excuse me. So let's address with those. I think they are.
Okay.
Let's marry them.
There was one
they'll go online.
And on holding.
Yes.
Yes.
That so-called double taxation.
Also called double taxation. With withholding tax, it is one of the taxes that if you don't file, or if you file late, you don't suffer penalty. Yes. So if there is nothing withholding, yes. Is it happening? Yes. You don't file the right time. Yes. No, if you don't file the right time, that one you suffer. But if there is no liability and you don't file, there's nothing for you. If there's no liability, you don't need to file. Or if you want to file, you file nil, but file within a time. Once you file it, until within time. You file nil or within time. But if there's no liability, you can decide not to file. No, that is why we are not saying you have to file. But if you want to file nil, but file within the right time. Yes, any filing that is late, whether it's nil or it carries liability, you suffer the penalty.
Please finish with those two questions.
The withholding upon withholding. Okay. 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 So if I understand very well, the amount has been withheld from you. You work with other people, you're also paying them. You are by law, you also provide. So in the arrangement, is it a partnership?
No. What happens is that if there's an engineering project, he may be the lead consultant. Okay. His strength is structures. Okay. My strength is geotech. His strength is probably electrical. Okay. And we need this package to present ourselves ahead. But he is the lead because he was written to pay the invitation. Okay. Now, assuming we got the job and we are paid, it's paid directly to him because he's the lead consultant. Okay. Now, in paying to him, all the necessary tax deductions have been done. So he has to now give us our percentage because we agree on percentages, whatever. That's why he's asking. Is it per the law that when he's sharing with us, percent, should he have to withhold some money from us as per again? Because the money for the project payment, the payment for the work done has already been paid. Yes. Yes.
The sharing, you have a sharing arrangement.
Yeah, definitely to be there. It will be there.
So then it's not payment for the service. Sorry. It is not payment for the service. Like you are sharing like a partnership arrangement.
Yeah, exactly.
So but how do you share it?
No, the agreement has been done.
When you are giving them, do they give you invoice? Do they give you invoice before you give them the amount?
You mean the partners?
Yes, as a no, as an entity. Well, your entity is the one that is
Yes.
but your entity is working with 2 or 3 other people.
Yes.
So the cash is paid into the auditor's account.
Mm.
When before you pay, let's say Anuka, does Anuka give you invoice for the service has performed for you to pay?
It's already defined per our agreement. It's already
So
defined.
there's an agreement.
Yes, it's already defined. Maybe the schedule of payment, blah blah blah. If I do this one, you pay me this. It's already defined.
Okay.
Unless you are telling me that when the money is due, I should raise an invoice to him. Is that what it means?
That if you are a registered business, that's how you
Okay, so
insist on that.
Okay, so you raise an invoice. So raising an invoice, does it now allow him to hold me?
Exactly.
But how be we heard from the top?
Good. So that's why our gentleman mentioned that we have have on account. This is business, so it's on account. So at the end of the year, each of you will have to file a return. The tax that will be withheld from him is his personal tax. He has paid you people. Whatever you have also suffered is your personal tax. When you file your return, it's already hitting there as credit.
But you see the trick. The trick is that I invest my operational money.
Good, your cash.
Yes.
That is why you have opportunity to ask for exemption.
Yes, that's what I've seen about me. Because if my project, I'm to get, let's say, I charge for test with, let's say, 100 cedis, and you withheld 7.5% of 100 cedis, of the 100 cedis, and I'm paying the guy to do for me probably 90 cedis. It means that I'm not getting anything. So, virtually, practically, engineers, consultants, we are not making money. So honestly, we are not making money.
So please, let's with this.
Of that group has to pay some other people from that same money which has been withheld already, that I have also withheld something from him again. He has to still withhold them. So the same money,
you mentioned economic double
yes,
taxation.
the same money is being withheld 3, 4, 5 times from the same money.
No, I think that the opportunities are there for you to get relief. It's only you are not taking advantage of it.
That is why we are doing
and do this engagement. Yes. So we don't need to change the law.
It's there. It's a real problem. And somebody mentioned something. Let me put it across very fast. That I have worked for engineer there. He has paid me. He held some money, tax from it, but he has not given me the certificate. Now he has to put it. It has to go into the portal. He has not done it. GRA maybe audits me, and I have to show that I have gotten some, I've paid some taxes. They check, and it has not gone into my portal. Should it be in fact, maybe I keep on pressuring him to pay it, and he has not done it. Shouldn't it be like a whistle blowing to GRA to chase him and collect that money? Should I have to still go and press him? If he doesn't pay, then it becomes my liability that such amount of money has been seen in my account, but then the tax is not showing in the portal. At least by so doing, his thing should be seen, and the GRA should pick it from him into my portal or to credit me. But it's not done.
So in this case, are we looking at a situation where he has withheld and has not paid to GRA?
That is it. It is done.
He has withheld but has not paid.
He has not paid. And I'll be penalized for that tax not showing in my portal. I would rather be penalized.
If we are officially informed, we will take it up.
Okay. That's
So we'll go on. I'll come back. We'll go online. Do you have any questions?
Is there a question that we asked? Oh. Please, what's
that?
About if you went for about registered your company for about 3 years, so proprietorship, I'm an architect, and you've not gotten a project, what happens? Because last year I was going to, you know, our professional body, you have to pay annual subscription fee. So we have the ARC and the GRA. For the ARC, the government body, they're saying that they need your tax clearance certificates. And I don't have that. So I can't get, out of paid, I can't get a printout of my annual certificate as I'm in good standing. So by tying me, I've not had a job. I can't get a tax clearance certificate. You don't believe that I've not had a job. What do I do?
Thank you very much.
Before you go on, you see, we developed the Engineering Council legislation. We intentionally want engineers to comply with the law. So we put it in there that before you got your renewal, you need to declare your tax clearances. We intention. So we have tried to make the effort that all engineers really comply with the law. So you need to help us.
Thank you very much.
Please,
I'll come back. Let's go online. I'll come back.
Oh, I think we're moving. We have an era of self-assessment, and the law takes you up to the by the end of the first 4 months after the year to file your return. Now you can also do what we call self-assessment. Also within the same period, as we have entered this year 2023, the law is by end of April. You can file a self-assessment and say that when I look at the economy and I look at my business and my clients, I think this is the income I'll make this year. You get it? You can file that. The law gives you opportunity to amend it as many times as you want. That's why you have the portal. So it means that you have not filed the return. Like
they give you professional assessment
and that is why it's a provisional assessment. You can always ask to see the manager and explain your case. He may ask that, oh, okay, out of the 500, 300 cedis for now. That money, if you are not calling anything, I mentioned refund. If it continues for long, you can ask for refund.
Yeah.
So the provisions are there. We just are not taking advantage of it. So with your case, you just file estimated, you estimated your income for the year. Right from the beginning of the year, you estimate and file. If things change and you see that you're getting income, you file maybe SCDs. By June, you see that some contract is coming your way. You can change it and say, well, I'll make 1,000 instead of 100 cedis. Yeah, once it has passed, when you file, once the period for filing has passed, when you file, you incur penalties.
Let's go online. Do you have some friends online? Online. Any questions from our online participants? What do we have there? Please, if your hand is up, you can give us your shout. Okay, so give us.
Okay, this question is from Richard Sedafo. He's asking, Company A withholds tax from Company B. They do not pay the amounts they withheld for 2 years, and when Company A comes for withholding tax certificates, Company B says they would pay the amount they withheld into the company's account. Is there a remedy for this?
They will pay
they withheld into the company's account. Okay. Company A withholds tax from Company B. They do not pay the amount they withheld for 2 years. And when Company A comes for withholding tax certificates, Company B says they will pay the amount they withheld into the company's account. This account. Yes. 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 So is there a remedy for this?
So what happens is that the truth of the matter behind this withholding thing is that the agent, which is the company you have interacted with, is supposed to pay on your behalf and just give you a certificate. But the truth of the matter is that most often they do not pay. If you go and demand for it with so much vigor, next time when they are having contact, they won't even call you. That's the reality on the ground. So, as we have said, and it is something we all know. Okay, so what the system is trying to do, we are trying to get it to be so robust that it gets to a point when you have interacted with somebody, you are supposed to withhold and you don't withhold. It reflects on your team or the Ghana card. But once we have not gotten there yet, these are some of the teething problems that we still have to massaging. But are you okay with that?
You have addressed. If you have not paid, like I told my brother, write a letter to us. When you write, we'll go to that person, we will assess his return. Your name is not there. So we'll write to the person. That you said you have help for this person. There's no evidence that you have passed, then you are owing here. We are coming to you with all the interest. What do you call, I talked about tax. We will do for that even return alone. We'll do specific on that return alone. And we'll give you a assessment to pay. Yes, you can send us that query. Yes, you can send us that query. Yes, yes, you can communicate with us on the portal.
Okay, this question is from Robert. Can you please repeat the criteria an applicant needs to meet before being granted withholding tax exemption by the Commissioner General?
Okay, basically, like I said, the withholding exemptions are on the withholdings on account. So first of all, you should be applying for exemptions on withholdings on account and not the final withholdings, because they don't give exemptions on final withholdings. That is one. Number two, for you to apply for withholding exemption, you should have been audited at least within the last 3 years, so that you will be certain of your actual tax position. Number three, before you apply, you should make sure that at least you have 2 of your directors on your PAYE setup. And those 2 directors, their chargeable income per month should not be less than 10,000. Yes, I'm coming. So that is for entities. That is for entities. A sole proprietor can also apply for withholding exemption. But like I said, when we're looking at 116 subsection 2, the withholding on supply of services, etc., are supposed to be done by persons other than individuals. So if it is about a withholding that is not supposed to be done by an individual, in the first place, you will suffer that that withholding, you can apply for exemption. But if you are suffering from a particular withholding and it's on account, like the section 116 subsection 1, where the withholding can be done by both entities and individuals, and you can establish for sure that you are overpaying taxes, because that's another thing. We should have evidence that the withholding is leading to overpayment of taxes. So if the audit establishes that we are to pay so much, but the withholding made you pay so much such that you have a large credit sitting on your ledger with us, it will be evidence that the withholding is leading to overpayment of taxes. Then we'll also look at how the withholding on accounts is affecting your cash flow. So we look at all those things. So if you are an entity, so your 2 directors, at least 2 directors should be on your PY schedule, and then be receiving income of not less than, chargeable income of less than 10,000 a month. So what we are particular about is that you should be paying the tax equivalent of that amount. Whether or not you pay your directors is another thing. But if one withholdings and you can account to us that you have 2 directors who are receiving up to 10,000 a month and they're on your PY schedule, you have been audited. After the audit, if you apply and there is the need, we can quickly do an audit on you and proceed with the exemption processing. So basically, those are the requirements. You should have been audited within the last 3 years. The taxes that you want to apply for withholding should be withholding on accounts and not final withholdings. You should have evidence to show that you are overpaying taxes as a result of the withholdings. If we are certain of all these things, and you have also filed and paid all your returns, because it's a compliance tool. Once we apply for withholdings and we have realized that you've not been filing your returns, you have some monthly returns that you have to file that you have not filed, like the VAT, for instance, and PAYE. For VAT and PAYE, you are expected to file every month, even if you have no tax. But some of the other withholdings, If you don't get anything, you don't file. It is only when you have something, then you file, or you have nothing, but you go and file it. That is where there may be a penalty. But you have nothing, you are not filing. That's okay. That is why when you are filing your PUI return, down there, they will ask you the question whether you have other withholding return to file. Then you answer yes or no. Once you answer no, it means that you don't have other withholding returns to file, and that will end it.
Okay, this the same person. What is the process for filing PAYE tax returns and obtaining a tax clearance certificate?
So PAYE tax returns are monthly returns. So PAYE returns are filed by the employer or the withholding agent, who is the employer under section 114. So for PAYE, you file every month. You withhold tax from your employees, and you are expected to file by the 15th of the following month and make payments. So that is how PAYE returns are filed. But for those individuals who are on the PAYE schedule, those employees, when you want TCC, apart from the PAYE schedule that returns that your employer is filing, you, the individual, is expected to file your personal income tax returns. You are expected to file your personal income tax returns. And if your sole income is from employment, which is already subject to withholding, you can file. Then we have a form we call the supplementary form 51, where you list all the months that the taxes were deducted from you by your employer, and you send that to your tax office, and you can be credited with that amount because it has already been withheld and paid on your behalf. But as an individual, you are expected to file your personal income tax returns annually. If you don't file, you won't be able to get your TCC or tax clearance certificate.
Okay, this from Engineer Stephen Yomo. He's asking, are salary workers supposed to receive tax clearance certificates every 3 years?
Tax clearance certificates.
Salary workers.
No. They are not supposed to receive. It is when you need it, you apply for it. Tax clearance certificates are for specific purposes. So if we give a general tax clearance, and for instance, I want to travel to UK, I want to go for visa, then you have given me a clearance that does not state that I'm taking you to US Embassy for visa. You may not accept it. So tax clearance certificates are for specific purposes, and they don't last for, they're just for about 1 month, expires. So I don't see how you just give a general tax clearance certificate after every 3 years. It is when you apply for it, you will get it. But we don't give general tax clearance certificates.
Can the years of assessment be changed during the audit process after you have already been served with a letter indicating the specific years to audit?
Can the years of assessment be changed?
During the audit process, after you've been already served with a letter indicating specific years of...
Yes, I think so. When they start the audit and there's a need for them to extend or even go back the years that you already audited, like my boss said, when you are audited for a particular year of assessment, you can actually be re-audited for that year. So if they stated that they were going to audit you for 2020, 2021, because you have already been audited for 2019, but maybe during the audit process, they realize that there's a need for them to go back in 2019, they can do that.
Okay, so we'll come here, we'll take 3 or 4.
Yes, sir. My name is Nkrumah from MDC Limited. I want to know if an individual fails to file a return on time, does it attract a penalty?
Yes. Yes.
All right, I have my brother
Yes.
here. Let me meet your advisor.
Okay, hello, good evening. I think that I've enjoyed the presentation. In addition to the questions I asked earlier, another question that is biting me, assuming I'm a lecturer at an university, and sometimes I do get jobs and I employ students, most of whom are foreigners, to work for me. They have stayed in Ghana for like 2-3 years, and I pay them from the jobs that I get. Am I required to withhold taxes from the students? Would you consider them as residents?
Yes, you consider them as residents. I wanted to even talk about residency, but it escaped me. Residency for tax purposes is not about citizenship. So if you look at the Income Tax Act, Section 101, when you have lived in this country for an aggregate period of 183 days, you are a resident for tax purposes. If you are a citizen of Ghana and you have permanent home outside Ghana and you have lived in that permanent home for more than 365 days, you are not a resident for tax purposes. But if you are a Ghanaian, you have lived outside for a period of less than 365 days, and you have a permanent Ghana, you are a resident for tax purposes. So citizenship is different from residency when it comes to tax. So an aggregate of 180 makes you a citizen. So the foreigners who have been in Ghana for 2 years, they are residents, not citizens, but they are residents for tax purposes. And when you are withholding tax from them, you are going to withhold as residents and not as non-residents.
If I am an employee and then there is a PAYE deduction every month, which is paid on my behalf, do I still have to go and file?
Yes, like I said already, when the year ends, you have 4 months after the end of the year to file your personal income tax returns. In the act itself, the Parent Act, initially people or individuals whose sole income was employment income subject to withholdings by employers was exempt from filing returns. But the act was amended, and now everybody is required to file, even if your only source of income is employment income, which is already subject to tax and withholdings. What you do is that you file. But like I said, you file and complete the supplementary Form 51, take it to your tax office, and they will credit you appropriately for the tax that has been withheld and paid.
We'll go back on behalf of one of our past presidents, Engineer to Right. Engineer to Right. Please unmute and give us your thoughts.
Okay, thank you very much. I think you can hear me now. Yeah, okay. Thanks to the presenters. I have 2 quick questions. The first one is, the summary of what they've said is that if you have a problem, write officially to your tax office, they will look into it and address it. The question is, during the processing period of that problem, what happens? Because life doesn't stop. The tenders will still continue to be advertised. Consultancy things will still be advertised, and you have to work to survive. What happens? Do they give you a temporary thing so that you can still go on working? Because it is in the interest of the GRA itself and everybody in Ghana that you work, because it's only by working that you can continue to pay tax. Number 2, you talked about residency and that you have to stay for 150 days, etc., etc. Supposing you travel for longer than that, so you lose your residency and then you take residency somewhere. But during your absence, you come back for about a month, make big money. Will you be considered as resident, or you will not be subject to all these things that affect residents? Thank you.
Thank you very much.
Thank you so much. Let me touch on this and then maybe my bosses can add something. The first one, it is always important for you to establish some rapport with your tax office. The tax officers or the tax authority are just partners with you. So if you are really facing these issues, taxes have been withheld from you, they are not paid, and you urgently need clearance, there can be an agreement with your tax office for you to be given the clearance. Sometimes, if you agree that these are taxes I really have to pay, but I cannot pay them now, or we need to cross-check to ensure that you are actually withheld and not paid, there will definitely be a way the tax office can assist you to get the clearance, to get your work going. They will not say that your work just stopped because you have been withheld and the withholding agent has stopped and supply with the credit, and for that matter, do not get the clearance. If you have an agreement with your office, you have established some rapport with your office, they will always wait. The officers will consider your situation, and you may have given an installment agreement, whatever is applicable in your situation. We do it all the time. They will do that to assist you. So it happens. And then the other one is about you leaving the country and becoming non-resident for tax purposes and then coming home with huge sums of money.
No, coming home and doing
Okay.
some job, which is big,
So
but
the
you don't qualify.
The two principles are the residence and the source. These are the two principles for taxation. If the source of the money is this country, is subject to tax in this country. If you are a resident of this country, your income everywhere well subject to tax in this country. So if the source of this country is subject to a non-resident person, and the source is subject to tax. Sorry? Yes. Yes. Yes, so some countries also have the global distribution for their residents. So the issue of critical double taxation will now come, and you may have to give a credit for suffering this double or a reduction. So the laws, if there is no double taxation agreement, the income tax itself has made provisions for that. So you have gone, you are a Ghanaian resident, you have gone to the UK, you have earned income there, you will tax it because it's sourced from that country. Then we are comes to our knowledge that you earn that income in the UK, you also tax, but you be subject to a tax credit equivalent to what you suffered in the UK, or you can choose the deduction where the amount you suffered will be allowed as an allowable deduction in getting to your chargeable income.
Good evening, Chairman. I'm Parker Emmanuel. My colleague, a senior lecturer at UCC, and I have a company registered in Asamankese. We have done a work and needs to issue VAT receipt to a client. The VAT charge is about 10,000 Ghana cedis. Your branch manager has given the excuses and will not even sit on his seat to take this money. And give me receipt. The client is not asking for VAT receipts, but I have charged it. I came to Accra. They say my office location is Asamankese. Is it a crime to want to pay this money? Since 3 months, the money is just sitting in my account.
Thank you very much. Maybe one of the things we didn't add is that when you want to pay, you can also pay online. You don't need to come to the office to pay. And so when you pay and there's evidence that you are paid, you can come to the office and demand the VAT invoice for the client that you need to present to. Yes, but when you start even from the portal and you're about to pay, it will link you to the Ghana.gov.
Thank you very much. I have a follow-up to a question that was asked about the tax clearance certificate. So ideally, how long is it supposed to take? How long is it supposed to take for your outfit to process a tax clearance certificate? And then on the double taxation, if Ghana has a double taxation agreement with another country, and a certain percentage of your fees are withheld, what happens? What happens if they issue you with a certificate? I mean, from their side that we withheld this amount of money. This is the certificate to that effect. How do you proceed? Thank you.
All right. So I'll take these questions. The first one that asks how long does it take for you to get a tax clearance certificate? Now we go back to the essence of the tax clearance certificate itself. We said from the beginning that it has to certify you that you have paid all your liabilities up to date, or you have made arrangement with the tax office to pay your liabilities. So once you are able to meet these two conditions, there and then, now even on the portal, it's there and then, you can print your own tax clearance certificate. You don't even need to come to the office. Now, people who are now most tax compliant, who have passed all the tax compliance regulations, they don't even come to us again. There are people who print their tax clearance from their own portal without coming to us. The system has even been made in such a way that you now can even address the tax clearance to the requesting organization. So that once you put the tin of the requesting organization there, the requesting organization will get the tax clearance. And also there's even a barcode that certifies whether it's an authentic tax clearance or not. So going forward, I would just say it's in real time. Tax clearance request is in real time. The second question, I will answer part of it, and I'll leave the rest to my brother. Now, when it comes to double taxation, we have some agreement with some other countries. Now, when the agreements are very clear, then there is also a directive on how to deal with the withholding thereof. But if the agreements are not clear, then we sometimes will refer it to our head office for further clearance. Are you okay with that? Good. So I'll hand over to my brother.
So just to add something little to the double taxation, if there is an agreement, oftentimes then there is no issue because the agreement will spell out which taxing rights are given to country A and which taxing rights are given to country B. So if Ghana has a double taxation agreement with the UK, they may agree that all passive incomes should be taxed by the source country and the other active incomes taxed by the resident country or the resident country. Yes. So if that happens, it will be clear. But in some situations where there are conflicts, because one person is resident here and resident over there, so it becomes, they may go into a tiebreaker. They have to consider some other issues before they get to realize who has the rights to tax what. It is when there is no agreement, when there's no double taxation agreement, that becomes an issue. If you have no double taxation agreement with another country and these things comes, you will have to come to our local laws to see if there are some remedies for them in the local laws.
Thank you very much. Oh, you want to say something?
All right. Thank you very much. To add to it, when there are double tax agreements, they supersede our local laws. So usually a double tax taxation agreement will specify certain transactions and the tax rates attached to them. Now, when you compare with a tax law, you will see that some, maybe we are withholding at 20%, but in the arrangement, it should be withheld at 10%. When that incident happens, we are compelled to withhold at 10%. So our law will then become submissive or will submit to the international agreement. So anytime our rates crash, we go under the agreement. We ignore our law. That is what it is.
All right, thank you very much. GRA, I think we should have part 2. Let's give it a clap. The part 2 will really focus on the portal, so probably need to work it out so that it becomes more compliant. But lastly, when you open the portal, I realized that there were some VAT elements that I have to do I don't even know of. I don't know those who are using your portal. A lot sitting down there red. They say, I don't know where they are coming. I mean, when you started opening up the portal, the first time I opened the portal, I saw those things, VAT, NHI. I said, where are they coming from? I don't know how to resolve that issue.
So it means that you have been registered for VAT.
Yes.
So if you have been registered for VAT, you have the obligation to file and make payment every month. And that one, the law is very clear. If you look at section 52.
Oh, no, it's not about that one. What I'm saying is that when you migrated us onto the portal, yes, you realize that when I went back, I saw that I owe VAT, I owe this.
It's communicating with our system. The portal communicates with our system in the office. So the moment you sign into the all liabilities you have to be.
No, but seriously speaking, if you look at the details there, you ask yourself, where is it coming from?
So because
it's happened to a colleague, he had to go there. I'm sure they have to clean the system.
Yes. So sometimes we just by mistake.
Yes.
Sometimes it could be by mistake. But sometimes you may not even be aware. Some people don't even visit our offices to know the liabilities that are sitting there for them. Just today, somebody called me that he incorporated a company 7 years ago, but he didn't start business. Today, this year that he started, and he's coming to our office to register. I took the tin and checked. I realized that since that time, he had registered with Wager and registered for VAT. And the system has been accumulating returns and taxes for him. And now he's saying that this is the first time that he's coming to register because he didn't start.
All right. So thank you very much. I'll ask the ED to give us a small concluding remarks. Then we'll go. So you want to say something? Oh.
Yeah.
All right.
Yes. There is a practice note on civil engineering public works. In general, civil engineering public works are exempt from VAT. But there are definition of terms or what would be considered as civil engineering public works. So once the work you are doing does not meet that definition, then you are not exempt from VAT. So just a few minutes, let's just brush through what it says and familiarize ourselves. So the meaning and the scope of civil engineering public works. In this practice note, civil engineering public works in the context of the Act means the construction, maintenance, reconstruction, demolition, repair, or renovation of a building, structure, surface, or system, and includes site preparation, excavation, erection, assembly, installation of plants, fixing of equipment, laying out of materials, decoration and finishing in relation to infrastructure projects for public use and paid for with public funds as defined in Article 175 of 1992 Constitution. So the public funds means consolidated fund, contingency fund, all funds established under the Public-Private Partnership Act 2020, Act 1039, and any other public fund as may be established by or under the authority of an act of parliament. So what this means is if you are conducting any civil engineering works and it is for public use, however, the financing is coming from a private source, it does not make it a public civil engineering public works. It must be two conditions. It must be for public use, and the financing must also come from, yes, an established fund. Once these two conditions are not met, then the transaction is vatable. So we will leave a copy. Unfortunately, we were trying to get the soft copy so we could share, but you will have the hard copy here. So it's a practice note that will help you understand how to treat some of these transactions when it involves works that we do for public use but may not be financed from public funds. So yes, that's what we're giving you.
And then, are we able? Can you share your slides? Yeah. Okay. We can also share it. Oh, for this one. Okay. Thank you very much. Edie.
I think it's been a very long session and very interactive. Learned a lot. Let me thank each and every one of you for participating in this seminar or discussion. I think what we need to do is to probably have a tax series. I think the issues are there are many of them, and they can't all be exhausted in this short time. We started from 4:30, and we are still here. So probably we should break it down in small bits. I think today was just loaded. Let's break it down in small bits and try and exhaust the issues in a schedule, something like that. And I think that will be helpful to our members. So thank you all very much. And we've learned a lot, and I'm sure that some of your issues have been addressed. Thank you.
All right. Thank you very much. You can, I'm sorry, as you are going, you can interact.